It's me. Y'all on level 1, I'm level 3. Pounding on the table for my team. Every night I flex, I'm making big moves. That's a big move. Big money, big moves.
All right, before we get started, thank you everyone for joining. I'll do some quick housekeeping before we pass into questions and get into some of what the speakers will have to say. Thanks for taking time out. I know we have a lot to cover, so we'll be going through some Q&A for all the speakers and then get into some Q&A that the audience can come up and ask us live, right? We have a lot to cover. We're going to try to keep it 2 hours, hopefully. Before I get started, again, thank you to all the speakers. Thanks to Evan, Stock Market News, Stock Talk Weekly, Tony, Pounding the Table. We've been doing this pretty often. I'd say almost daily now for the past couple of weeks, and I'm pretty excited to hear from these guys. Give everyone a follow. This should be good. These are some of the best speakers and kind of investors and traders I've come across on FinTwit, so I'm certainly excited to hear more from them. And I guess without further ado, let's get started at 6 p.m. This is being recorded, so we will post it on our Pounding the Table YouTube channel after the spaces. It's also being recorded live, so you'll be able to go back on Twitter, click play, get a lot of questions about that. So you can literally just go on the Twitter account on this tweet that shares the space and be able to click on it and play it live right after it's done, which I have pinned above. So you guys should be able to see that tweet now. So yeah, I guess first question I think everyone probably wants to hear about this is we got the comments from the Fed. We turned green right after. So not just taking into consideration what the Fed said, but I'd also like you guys to just talk a little about what you think. Again, no one has a crystal ball. This is just personal thoughts. And before I even pass the question, everything we say today is not a buy, hold, sell recommendation. These are just personal thoughts of ours, and we're just trying to share a conversation that we're going to have about the markets. Nothing is, nothing should be construed as financial advice. So with that, Tony, I'd like to start with you, and then the same question. So we'll go around the horn. What did you take away from the Fed today, and just how do you look at the markets going into 2022?
Yeah, Rahul. Today's a pretty cool day because I feel like yesterday, if you were in spaces, today already happened. Because it did happen to the T, and I wanted to break down some of the mechanics of market action. I don't know if you want to do that now, Rahul, or you just want me to talk about what they how the Fed was, just in terms of what they said for policy. But let me know.
Yeah, you can talk about what they said, what you took out of it, how you're positioning the next year, and just kind of your takeaways on the markets. I mean, this is kind of free mic, so go ahead.
Yeah, okay, of course. So basically, yeah, I mean, yesterday we were talking about this huge bidder at 4,600. And we were talking about all these 4650, 4750 call spreads that were opened up yesterday. So knowing that, and then we were having this discussion with KT Problem Sniper, who's back on here yesterday, and we just discussed how the amount of oversoldness, in ARK and the 4-to-1 put call ratio, stuff like that, just in a bunch of these different names that have been beaten down so much, the max pain was really an upside move. And what was really interesting is that the Fed came out, and I think that it's actually, it's better than what we were, I think, anticipating, just because it seems controlled, right? And a lot of the time when Powell comes on, and you can tell the tone in his voice, and I will tell you that algos that trade, they have language processing on there that will help you decide buy or sell. I'm telling you, so stuff like that's really important, gave confidence. So I think Powell actually does have a really good handle on this, even though he was wrong, sure, but I think he's telling us that he has the tools, right? And he knows that if you raise rates before you taper, before you end, tapering, that's going to be horrible. So good thing that he was very adamant about okay, we're definitely going to stop or slow, almost stop tapering, and then we'll discuss raising rates. So I think people projected 3 to 4 rate hikes next year. People were projecting a lot, and I think they're talking about 3 now, I'm pretty sure. But that's obviously data dependent, and that's a really important thing that he needed to say still, is that we understand that the economy could be confused by perception and speed and stuff like that. So they're basically saying, we're watching the markets, dude. We're gonna be fine. We're just let us taper, because if not, inflation will go nuts. Because they're letting it run to 2.7, then they're letting it run to 2.4, then 2.1, and then by that time rates will be over 2, so things will even out. That's their plan, and then they're gonna taper monthly. I think 30 billion a month. So if knowing that's they're signaling 100% rate hike in May. And it seems like he said taper is probably 6 months left a ways. So we can start thinking that maybe people have already priced it in way too early. So thinking that the April is 94% likelihood of priced in. So knowing that now, it looks like it's probably going to be a little later, and then they're going to be data dependent, of course, which all those things are important. So I think everything he said was exactly what you wanted to hear, because we knew a taper was coming, because if he walked it back, no credibility in the Fed. So that's a lose-lose. If he tapered too fast and he was like, yeah, we're just going to like raise 5 times, like whatever. But he was like, chill guys, we're going to do this like, we do this right. We're not going to be super slow about it, but we're going to make sure everything like goes forward. And that means that like if they realize they went too far, they'll walk it back right away. So I think the market already priced in a worse scenario than that. And we were talking about this too with crude, and the fact that Biden said that the drop in crude from 85 to 70 was not reflected in inflation. And so you look at commodities today, and then like things look better in terms of like just this overall inflation. And I'm not saying that they're good, but like they're better than they were like 6.8 or whatever we were talking about last month, or this most recent month. So things look good forward. I'd like to see ARK like reclaim 100. I'd like to see growth make steady bases, and like the market, the S&P in general, cool a little bit and put some money into those higher spec names that have been hit the most, and I think oversold. And I think you're going to get that for the next month or two. And like IWM is probably the place to be looking, I think, for a lot of in the short term of moves if this reversal continues.
Awesome. Thanks, Tony. I guess I'll pass that stock talk weekly next.
Yeah, I mean, I agree mostly with what Tony said there. Me, Tony, and the other Anthony Einhorn, were kind of all in agreement yesterday, thinking that, either today wound up green after we got the relief rally, or then next week would be green. I mean, we were all kind of on the same consensus there, which was contrarian, really, because a lot of people were expecting today to be brutal. And, granted, Friday still could be rough because we have the quad witching, but, outside of that, I think we're in an interesting policy climate here, policy versus sentiment climate, because there's two risks on the table, right? There's the inflationary risk, which has clearly been, scaring liquidity out of the market at certain junctures. We've seen it with CPI data. We've seen it with the inflation narrative in general. We saw it when Powell said he's going to retire the word transitory. So I think there's some inflationary concern on the sentiment side. And then there's obviously also the concern of interest rates impending. So when we look at historical data, typically you see the more steep reaction during the tapering event. And then you see, you do see a reaction to the rate increases, but you don't see a steep reaction because, people have, a 6 to 8 month period over the course of tapering typically to, process their decision making and process their rotational decisions. And so a lot of it becomes baked in once you get to the end of a tapering cycle. And then, granted, as everybody knows, just common sense, coming to the end of a tapering cycle, you expect rate increases after that. So it's really about market expectation. Whenever you have consensus expectations like that, typically either the move gets baked in, and then on the day of the event, you see, a contrarian move, or the move doesn't get baked in quite enough, and then you see it all happen all at once, on the day of. So it can be a binary event. It can go either way. But, I think in this case, with all of the selling we've seen under the indexes, right? Not necessarily paying attention to the indexes hitting all-time highs. We've just seen a lack of breadth widely in the market for a while now. And, liquidity concentrated in a handful of names. So there's every reason for some of that liquidity to spill over and go back to those names that are, 50, 60, 70, even 80% off the highs. And I think you will see some of that going into early next year. But, like I said, the climate is interesting from a policy versus sentiment perspective because raising rates is, deflationary. And, there's other pressures in the economy that are inflationary. So while typically raising rates is bad for growth and tech assets, because as we know, those growth and high tech assets are valued according to future cash flows. So if you raise the current cost of money, natural logic dictates that you see multiple compression in those names. But in an environment like this where, the inflationary concern is also causing people to take money off the table, but we're kind of being forced to weigh our scales. Is the raising of interest rates a good thing, right? That is what I think that's the narrative that's kind of emerging. And knowing that a lot of the reaction is baked in going into next year, and knowing that, even with the 3 rate increases scheduled penciled in for next year, we won't be at what I call absolute high rates, where if you're looking at them from an absolute perspective, historically, we're not going to be at quote unquote high rates for a while, right? It's going to be a very slow process of escalating us over there. And so, I think the market is kind of weighing its sentiment between, are we more concerned about inflation, or are we more concerned about the policy headwinds we have and of the Fed withdrawing support on tapering and eventually increasing interest rates? And so I think that's an interesting dichotomy. And while some people might get scared on both sides of the ball and just say, there's knowing that we have the inflation risk, knowing that we have the interest rate risk, I don't want to have money on the table. And if you think that way, that's fine. But for me, over the course of my entire career, I've stayed net long mostly. and I just time my short exposure in bursts. When I really feel like there's headwinds to the market, or the indexes are in a downtrend, or if there's really bad breath like we've seen, that's where I'd be adding SPY and QQQ puts and longing UVXY, or shorting individual names where the charts are broken down. I definitely do that, but overall I stay net long, or at least if I am heavy cash, I'll at least be 30 or 40% net long. And so because I don't bother calling tops or perfectly timing my long short exposure, because if I could do that, I'd be a billionaire on a beach somewhere and I wouldn't be here on Twitter Spaces. But the reality is that if you go back 15 years into the market, and you take a portfolio that you were net long on for 15 years versus a portfolio that you were net short on, I mean, the difference in performance is overwhelming, right? I mean, the market, I don't want to say stocks only go up, because that's the narrative that gets put out there a lot, but in reality, in the long-term picture, they really do, at least the indexes. And so knowing that, and knowing that, to me, the stock market is the best ROI place to put your money, and it has been for decades. Maybe crypto will emerge as a better place over time. I'm sure Anthony can make a case for that. But, the reality is for the last few decades, the stock market has been the best place to put your money. And, I think it'll stay that way, especially for, legacy investors, or even people who are in the older demographic, And the reality is, I think younger traders and younger investors just have a different level of risk tolerance and a different perspective on the types of companies they want to own. I think, like, when this generation gets older, and when we see this massive transfer of wealth, I know a lot of you have heard this before, but we have like $76 trillion in wealth being inherited over the course of the next 15 years. That is the highest amount that we've seen ever over a 10 to 15 year period. So a lot of money is going to come into the hands of these people that I think are more risk tolerant, that I think want to buy interesting, quote unquote, sexy companies that have the potential, to pull Tesla like moves. I think that sentiment has really bled into the younger retail market. And granted, the younger retail market isn't going to be 70-80% of the market, but over time, I think it'll be kind of a permanent change. I don't think we're ever going back to your grandfather's stock market. I don't think that we're ever going back there. I think valuations will still matter. I think multiples will still matter. I think there'll still be compression in multiples when we run into policy headwinds. But, the reality is, I think the market is shifting and changing. And, I think more and more of these moves are becoming baked in more and more in advance. And, this year also, we've seen a lot of contrarian reactions to the actual events, kind of like we saw today. And, quad witching aside, I really do think we're set up for a good green week going into next week, tying into the typical Santa Claus rally that we get. We've had a lot of bleeding in names that are, just absolutely broken down charts. And granted, they can always go lower, but there's a lot of good opportunities. I think, some opportunities that in some stocks that were trading at insane valuations earlier this year and late last year, have now come down to points where they're, again, reasonable trade opportunities, or even reasonable investment opportunities in some cases. So, I think there's pockets of interest in the market, and I think there's pockets of value, even in growth in the market, that people are going to want to capitalize on going forward. And I really feel like this whole shift in policy has been really kind of a consensus expectation for months now. I think most people who are educated on policy changes, on, the shift from tapering to interest rate increases, most of those people, especially institutional money, has seen this coming, right? Even last meeting in November, we expected tapering to be announced. It was. This meeting, most expectations were that tapering would be, raised by 60 to 100%, and it was doubled to 30 billion a month. And so, we're kind of hitting these expectations that the broader market and the institutions have. And it's very difficult when you have the market running into these consensus expectations to get those steep negative reactions, those immediate negative reactions where the market flushes. Those are less likely to happen when you have so much, advance notice of these events. And, now that everybody kind of knows, hey, next year we're going to get most likely, 3 to 4 rate hikes, people are starting to wonder, is it worth pulling my money out of the stock market? Is there a better place I can put it? Am I going to sit on cash for how long, right? From an institutional perspective, those guys can't sit on cash for there's also a misperception, by retail that institutions and hedge funds are going to sit on cash for a year plus. That's never going to happen.
No
They,
shot.
they
No
they have
shot,
to
sir.
allocate capital. Like they have to. That's how they function, right? The financial services are going to get back involved in the stock market. It's just a matter of how long they stay on the sidelines, and it's usually only a few months. I mean, if you look at the history of crashes in the stock market, last year especially, but look at the other crashes, they're historically bought up very quickly, right? And so that narrative I think is still in place. And like I said, I think a lot of these reactions are going to be baked in going forward. And I think people are going to maneuver inappropriately and reallocate inappropriately, expecting this big doom and gloom. When in reality, I think we've seen enough rotations under the indexes to make room for more liquidity. And so it's part of the reason that the indexes keep trading higher over year after year after year is because if there is rotation under the indexes in individual asset classes or sectors, that correction shifts and shifts and shifts, you make room for more money to find a place, to find value, or to find opportunities. And so, I think that we're seeing a bit of that now. And I think, granted, it's early to make this judgment, but I really do think next week's going to be a good week. And maybe.
Did stock talk drop off for a second? Tony, you there?
Yeah, I think he muted himself by accident.
Oh, okay.
But while he
maybe
gets back, I want to touch on one thing he said just super quick, and I really want to let Stock Market News talk.
Yeah.
But I do like the fact that he was about like we kind of start knowing what's going on now. So having things that are uncertain is what causes people to sell, and then you couple that with like the changes in taxes like next year, and then the wash rule. We've talked about this all in Spaces. So everything hit this like super fast speed liquidation, selling, winding down situation. And now it's looking like it's the reversal of that. And then once we're there, we'll start consolidating and basing. And then I think as Fed comes out with more and more news and timelines, we'll get back to a more in tandem market. So that's good. I mean, because uncertainty is the biggest fear of the market. So even though, we're tapering, we know we are. And we know how
exactly. Yeah, I think the markets, like you said, like clarity. And I think one point Stock Talk Weekly was making very well was about reactions happening sooner and sooner. I think in the past, years ago, not even too long, maybe even 5 years ago, you saw these 20-30% drawdowns drag for months sometimes. And I think what's happening now is a lot of these reactions are happening sooner for a smaller duration of time. Rotations are happening faster, and you're seeing things move in and out a lot quicker than typically. And I think there's obviously a multitude of reasons for that. But I think that's definitely a great point. And I had that tweet pinned above. I think Stock Talk Weekly literally said, I think it was 5 days ago, I have a tweet about it, like tapering interest rates are different. The reason you see a bigger reaction to tapering is because when it ends, rate hikes are expected, as we already know, by which point it's possible rotations are done. So very well said, Stock Talk Weekly. And Evan, I know these guys covered a lot, but would love to just hear any comments you have on the Fed or just what you're looking at in 2022.
Yes, overall, I didn't get the best chance to dig into the Fed's minutes from today, so I'll kind of avoid that. But I think that, a lot of people have comments on Jerome Powell, but the one thing that Stock Talk did kind of mention there that he has done an amazing job at is at least being very upfront and clear on what he's planning to do. And, it's not even just that, it's kind of like telling you what he's going to do next time and being very clear and upfront with that, not shocking anyone. So, like, we can kind of be in that zone where, we're tightening, but what's going to happen? So I think that's definitely one thing. He's been really clear, and, he definitely did get some things wrong at the start, but I think that kind of really goes into how difficult forecast planning is just a month ahead, just 2 months ahead, let alone 6 months to a year ahead. It's once you get the further out you get, the more we get to the point where it's what are we even doing? It's almost impossible, but that's besides the point. Looking, I'm much more of a long-term investor than a short-term trader. I've seen some opportunities in areas. One thing that also Stock Talk also mentioned there is kind of the trope that stocks only go up. And there is definitely some concepts and some thought to that on the back end, but obviously not every single stock does only go up. But definitely one thing that I'm stealing this from someone, I don't remember who it was, but really the indexes are made to only go up. They literally rebalance each year, take out the bad stocks, keep putting the good stocks. There are certain indexes that don't do it, but the large bases, the S&P 500, the NASDAQ 100, those type of large base indexes really are made to only go up over time. I'm a permabull pretty much. There are times when you have to take a little bit more of a bearish sentiment, and for me that's been where we've been at for this last little bit. And what that means for me is I'm just really have slowed down my dollar cost averaging into stocks. I really haven't sold much. If really anything, I moved out of 1 or 2 positions at big gains. I'm not panicking, and I'm staying in my positions. Looking forward to 2022. whenever I look forward, I obviously have no idea what's going to happen. I don't expect us to have the type of rally that we've had over the last 2 years, but I still am expecting a green market. I'm looking to add into a lot of the names that I like for the long term, and maybe we get into some of that a little bit later. But I'm also watching for the end of this year, kind of the Santa Claus rally, which I was informed on the actual definition, the whatever it is, that actually is like the first week after Christmas and kind of going into the first 2 days of the New Year's. So I think that maybe we can have a setup there. I think the market has been very happy recently, and we've seen the Fed carries the market. Definitely today's move, the Fed definitely moves the market. I think that's pretty much a fact you say, but I'm going to say the Fed carries the market. And I think this is the type of thing. For the last couple of weeks, we were in that area of chop, and we really needed something to take us out of it. I think this could have been it. Maybe we look back at old takes exposed. We actually kind of need that for the stock market. I don't know if anyone knows the old take exposed for sports. We kind of need that for a good stock market one, but maybe it does become an old take. But I think this could be the thing that guides us to a little bit of a breakout.
Awesome. Thank you, Evan. Yeah, and I forgot to clarify, but I think Stock Talk Weekly is definitely more of a trader. I know he has a growth account separate. I know Tony goes by being an innovator. So again, trading more frequently, also maintain some growth positions. But I think Evan and I are a bit similar, focused on just long-term investing and don't make as many moves day to day. At least I know that's what I've heard from Evan. But I'm not sure if you're really trading that much, Evan. But it seems like you and I are pretty similar styled in that sense. But I think you transitioned into the next question I had, which I think we'll go in reverse order this time, so Evan doesn't have to wait to go in the end, and I'll start with Evan.
I feel bad.
I don't want Evan to wait again. So let's just go reverse. And I think it's a perfect question to start with Evan on, actually, is we know market conditions matter, and there's a lot, macroeconomically, you have to think of things just internationally. We have a global pandemic going on right now, to think about, what's your, how long you want to be invested in, what style you have, etc. There's so much, right? You got into indexing a little bit, which, again, you could do really well just doing that. But, I think we've talked a lot about macro in the past 1 week or so. I think I want to transition into more individual stocks. And again, as I mentioned initially, none of this is financial advice. It should not be conceived as such at all. But with that being said, Evan, assuming you know the conditions now, we have a little bit more clarity. Obviously, things can change. What's one stock that you plan on holding, regardless of drawdowns in the market? And, maybe a quick thesis on why. You don't have to get into super in depth, of course. We'd love to hear that, but just for the sake of time, just try to keep it brief. Why you think, like, what do you like about the company if you had to do an elevator pitch, and then we can just go in reverse.
So the problem I'm having here is I have a little bit too many for this long term. So I'll throw out, and there are a bunch of the big names. So, when I look at my largest holdings in my portfolio, the largest one actually is Ethereum, but that's just because of how much it's been up. The real Apple in there. So we could go on that one, but also Facebook, Tesla, Nvidia, and Amazon I'm looking at here are ones that I throw in there as well. Apple for next year specifically, no one needs to tell you on the real story or whatever what's been going on with iPhones and everything like that. I think that two things that I want to touch on, actually they lead into each other, is the saying that Apple doesn't innovate anymore. And I think that is one of the most false statements out there. There's a chart that's been going around FinTwit that it kind of seems to pop up every couple of months, and I actually saw it yesterday. But it's like about AirPods, the revenue for 2020 versus other companies. Now, I am fairly certain that graph is wrong and it does overstate it, but the concept is still there that Apple still creates these really innovative technologies that gets used a lot. The problem at Apple's scale, you really need some big things to push the needle. AirPods, the business, it's a huge business, and for other companies, it would be life-changing if it was its own thing. It would be a massive company. The Apple umbrella, it's not looked at in the same way. I mean, I know everyone from a consumer standpoint really does enjoy it, but I don't think people do give it the respect for the innovation in that area. And kind of going on that theme, the AR and VR headsets and everything that's rumored for this upcoming year, I think is something that makes me excited for Apple right now. So obviously looking 5 years, there's the Apple Car and whatever, and that's to me just a call option, and you can't really make bets on it. Whenever I see the stock go up because of an Apple Car rumor, I do get a little bit worried on it. But I don't think that's what's been happening these last couple of days for me. Well, it actually was a little bit of a part of it because of the KD Huberty upgrade. But I do think that AR VR headsets is something that will be coming from Apple this year, and I think that the first iterations do take some time, but you might be seeing some big moves and some big thoughts of, okay, Apple now has AR VR headsets out. Now we can kind of see the pathway to that growing. So I'm excited for that going forward.
Yeah, so just that's a great explanation, honestly. I mean, definitely compelling case. Just two things here. So I was looking to get a new MacBook, and I can't even get one until the end of January. Like I was trying to get the 16-inch with the M1 chip and all that. So definitely demand is not the issue here. But I think that what you're saying, and I think the argument that people have with Apple is not an innovative company, is that like people are. You're right. They're not like giving enough credit to how they make money with everything that they're doing. Like any product that they make that goes into their ecosystem makes insane money. And so, and that's to my second point here about the car. So I've always thought, and we know this from Tesla, that making an electric car company is extremely expensive. Now I know Apple has like the most obscene cash reserves, but would you not think that it would like make it would dampen the stock's price if they started spending so much on something, especially by the time it's like let's say 2025, like my Tesla will fly. So I'm just thinking, and I'm just thinking, what do you think about that? Like in the next 5 years, because Apple's maintained its place in the S&P and the Nasdaq and everything because of how consistently profitable it is, and I feel like any hit to their EPS is like a shot to the face.
So I don't think the car is the right direction for them to go. When I do think of Apple, I don't necessarily. I know it's a hardware company, and maybe that's where they're kind of getting this that the hardware building something is similar. And my thoughts are much more software. Like if you were, I kind of put Facebook in a similar situation with the Metaverse. And if you ask me the same question, which they're going to have to spend a lot of money, hurt in the short term for something that hopefully will be bigger in the long term. To me, the Metaverse theme is a little bit more clear. So I get this from a different perspective because Apple, I really think that this kind of shows you or tells you that they definitely see themselves. We are a hardware company. We make things. So we make big things like that. So I don't know how excited I am about it right now, but EVs are the future. There's been a long time, a lot of companies, a lot of startups that, well, the traditional companies didn't really transition quick enough. And, we're seeing a lot of startups right now. If you asked me, who would you trust rather, a company that's 3 years into doing it, or trying to catch up, spending billions? I would say Apple. So I believe in EVs for the future. I don't know, I think the answer is the same as I would say with any EV stuff. It's too early to tell if they're going to be really do it, and who knows if it's worth it at the end. But I think it does make a lot of sense. Like if you look at the software upgrades and everything that that Tesla can charge and everything that they can do, I mean, it does make kind of sense. But
Yeah, I could totally see it working out. Like, I'm not saying it wouldn't work out because I think Apple has enough money and enough. Like, it's Apple. Like, they'll do whatever they want to do. It's just the opportunity cost of, like, let's say it costs them like 50 or whatever billion to get that going. I could think of a couple places I would probably put that 50 billion, or probably more to actually get it like functional and like off the ground, and all the R&D and the factories and everything that would have to be made.
Mm-hmm.
So I just, yeah, I mean, I think that regardless, the AR and the VR stuff that's coming out, that's super easy and intertwinable. Like, imagine your AirPods now just have like a lens that come around, or whatever it's going to be. People are going to pay $1,200 for it. So that's definitely going to be a super high, and the margins on that is like definitely going to be better than the iPhone. So they're going to be making a lot of money with those different products coming out. And then not to mention if they just open like an app store that's like a Metaverse app store, super easy, all intertwined. It's just the users, anything that they can get on people that has like high margins, like subscription, recurring revenue, all that kind of stuff is that's Apple's game, right? And then you can just do more buybacks, pump the price to infinity, and Powell will help you because it's number one everywhere. So yeah, I like it.
So yeah, I mean, I kind of tend to agree with Evan on Apple. And Evan, I know Tony's asking some smart questions. He gives me crap for owning Apple for the longest time, all the time. But I kind of like that pick, and I do see. I think the moral of the story here is I see what Tony's saying in terms of opportunity cost because EVs is very tricky in terms of hardware. But what I tend to agree with you on, Evan, is the fact that they can literally put their money into essentially any kind of line they want to go into, and they've proven they can do well, right? I mean, they've been made fun of for every single product they brought out, every single one. Everything was supposed to flop. Even the iPads were supposed to flop. So if there's one company that's proven everyone wrong time over time again, I think it's Apple. So definitely a valid point there, Evan. Anything to add before we move on, Evan?
Yeah, so the only thing I will say on top of that, the one thing that I do like about the whole car thing, or at least I want my companies in Apple stages to be willing to take chances with at least, like, when I'm saying take chances, Apple is $100 billion or whatever it is on their of cash in their seat. Be willing to spend that 10 billion and get it wrong. 50 billion is excessive, and I don't necessarily. I think I would rather get them to buy out a company or whatever. But if they're going to spend 50 billion, they obviously see the opportunity, and as long as you're hitting at a percentage of them and your hits are big winners, they pay for the losers, and over time we're kind of see Apple at the top. So I think the overall idea of it is just really that Apple is still innovating and really still trying to think about innovation, which makes me, if it's not the Apple car, it makes me really excited about the future of Apple.
Yeah, the fact that they're actually thinking into this, and we've heard so many rumors, and I'm sure when they come out with this proper news on what they do and how they do it, in Apple fashion, it'll probably be well branded and hopefully well executed as well. So definitely, good points there, Evan. And with that stock talk, same question: one stock, regardless of drawdowns, that you think you'd want to hold.
Just, you said stocks in general that I'd want to hold during a drawdown?
Just one. Try picking
okay,
one
just
that
one?
you want to hold. Yeah, just any drawdown. This is like
I
one
mean,
stock.
it's probably going to be the only stock that I've held for 5 years plus, which is Tesla. So I would imagine that it would be Tesla in this case for me too. And, the thing with Tesla is from my perspective, is it overvalued on paper fundamentally? Of course, right? The entire EV industry is. If you're purely looking at it fundamentally and on paper in a vacuum, all of these companies are overvalued. But the growth of the industry, and I've spoken on this a million times, right? Like, we're at 3% global adoption, and there's all this hype and all this government money being poured into it, and every legacy OEM in the world spending tens of billions to shift their entire business model, all of their supply chains, their manufacturing facilities, and convert them over. So, this is kind of like one of those big snowballs that you can't stop. And I think very quickly we're going to go from 3% global adoption to 10 to 20% to 30% to 40+%, in short order. And by short order, I mean, 5 to 8 years, which is relatively short when you're considering the turnover of arguably one of the biggest industries ever, which is the auto industry and the fossil fuel industry, which, really those two industries grew together, and infrastructure in the country, roads, highways, and everything was built around those. So the auto industry really spurred more of an economic, reshaping than we've seen from almost any other industry ever. And, coming into electric vehicles, we're going to see a similar thing. I mean, you're not going to need to rebuild roads and highways, although in certain places I think you do, but you're not going to need to rebuild, infrastructure in that way, but you're going to need to rebuild charging structure. You're going to need to build domestic supply chains of rare metals. You're going to need to rebuild battery infrastructure and battery manufacturing. So there's a number of other sympathy industries that are going to grow with this and are going to drive, it's going to be a multi-trillion-dollar industry, quickly. And Tesla is still the leader. All things being said, Tesla is still the leader. And the beauty about Tesla is that not enough people factor in, what we were just talking about Apple. This kind of bleeds over, I don't want to say completely to the Tesla story, but a little bit in the sense of global brand recognition, right? The reason Apple's able to plug and play all these different products, often piggybacking off other people's technology and being late to the game on some technologies. I mean, we saw the developments of phones, over the course of this last 2 decades be, really driven by other people who were doing things first, and then Apple, who did it better and packaged it better and branded it better. And, Tesla has done that now over the course of, the existence of the company, has built a global brand where it has the ability now to plug and play with its new products. I mean, put merch aside, which obviously every single Tesla merch product they put out, sells out instantly, but put that aside and just think of the actual verticals that Tesla has access to. Think of energy storage, which, consumer energy storage, it's a decent market now. That's almost consumer energy storage, and, more so utility scale batteries are going to be a multi-$100 billion industry, again, in 5 to 8 years. And knowing that Tesla has the best consumer energy storage product so far, and they're continuing to innovate their batteries to that degree, I think just continues to drive an advantage for them there. If they open up access to that vertical on energy storage and capture, let's say 10, 15% global market share, even less, it's going to add significant revenue potential. The numbers that came up about full self-drive recently are expecting by 2030 for Tesla to generate $15 billion in subscription revenue off FSD alone. You have to look at other verticals as well: utility, insurance, AI, autonomy, and other factors outside of vehicles, right? Elon talked about the Tesla bot last year. There's just so much, room for innovation and room for additional access to verticals. And I've spoken about this when I speak about Tesla before, but Tesla's one of those energy companies now, which, by the way, that is really how I define an energy company, even though there's still legacy Wall Street guys that call it a car company. It really is just an energy company. Going forward,
They're not going to make it. Those guys
What'd you
calling it
say?
a car company are not going to make it.
Yeah, exactly. They just don't get it. And, opening up access to all of these verticals: energy storage, utilities, insurance, solar, these are all
going to be multi-$100 billion industries. Tesla capturing anywhere between 8 to 15% market share or more, all of these verticals is going to add hundreds of billions of dollars of potential revenue. And that, I think, looking at it from that perspective, I think makes it, not a reasonable valuation, but it makes it an understandable valuation to know why it's trading where it is. And, if Elon executes, which betting against Elon's execution has been a losing game for anyone who has done that over the course of the last decade. But if Elon continues to execute and innovate in all of these industries, and Tesla captures, like I said, 8 to 15% market share or more in all of these sectors, it's going to be a much bigger company than it is now. And selling cars will really just be an afterthought. I mean, I think to continue to sell, a lot of vehicles. I think they'll sell a million plus next year, and probably 3 million, 4 million plus the year after. Like, they're scaling so fast. People don't realize that the gigafactories that Elon's building, once he builds them and puts them in a ramped up production, it takes about a year to get there from full build to ramped up production. And pretty much for every single facility, Fremont, Shanghai, any of them that you're looking at that are producing vehicles, he's multiple times said there's 50 to 75% room for additional production there, just by scaling different components of the facility. And if they can do that, if they can up the production by 50% at Fremont and Shanghai and every other auto manufacturing gigafactory they have, and build additional ones on top of that. Tesla last week just secured clearance for 4 additional models in India, and making it totally 7 models that they've secured for roadworthiness certificates in India. India is the 5th largest auto market in the world. So Tesla will launch in India soon. They're already launched in China. They're already gobbling up market share in China. Obviously, they're the industry leader in the United States. They're going to make more inways into Europe. I don't think that these car companies, these legacy manufacturers, are going to catch up as quickly as people think they are. Even if you look at Ford, and they just came out last week saying they want to double production of the F-150 Lightning to 20,000 vehicles a year. Tesla just shits on that. 20,000 electric vehicles. What do you say, Anthony?
It's insane how far behind they are. And I just wanted to touch on this too, thinking about how all the credit was given to GM and Ford recently at the EV summit. And it's just mind boggling how much they're trying to put Tesla down when literally Elon is the only person who actually did any of this stuff. So, he started it. Yeah. I love Tesla. I love that you're talking about it.
I wasn't sure if that was going to be the stock you said. So
it was not. I fully agree, though.
I'm eager to hear what you were going to say, but go ahead.
I love the way that he says it's an energy company, because it really is. And I think it's going to become an artificial intelligence company and a cloud computing data processing company too.
Not only that, Tony, even last week at Wall Street Journal Council, I tweeted notes on the conference. Elon goes, think of us as a robot company, and our wheels on car are the robots.
One real quick last point I want to make about Ford before Anthony, you go. Just quickly, I want to say, people were comparing Ford, right? Trying to get, so they're 10,000 per year capacity right now for the F-150. They're trying to get 20,000, and the CEO himself came out and said, not only do we not have access to enough lithium supply deals, but we just don't have access to a sophisticated enough battery supply chain. They have to build all these things out, and those things are going to weigh on their balance sheet too for these legacy manufacturers. People don't understand it's going to cost $50, $60, $70 billion for these companies to completely make a full pivot from, you can't just take an internal combustion engine factory and start building electric vehicles in it. That's not the way it works. Anyone who's studied these manufacturing facilities understands that they are fundamentally different. And so you have to build new facilities, build new supply chains, build new vertically integrated battery manufacturing facilities. There's so much to do and so much catch up to play. In the meanwhile, all Tesla needs to do is build more gigafactories and scale the existing ones. That's it. And on top of that, they can open all these other verticals that they're opening rapidly. They have insurance in almost every state by the end of next year. They'll have utilities in 5 to 6 states by the end of next year. I mean, these are massive verticals with hundreds of billions of dollars in available revenue. So I think people are just overlooking it. Even the bank analyst models are overlooking all of these other verticals. If you go look at all the big banks, all the tier 1 banks that have done valuation models on Tesla, even though their price targets are in the $1,200, $1,300, $1,400 range, they still haven't factored in the growth of these other verticals over the next 5 to 8 years. None of the models factor those in. And if they do it maybe on energy storage, and they're super conservative. But solar, utilities, AI, software, data, none of these verticals are factored in. So I think it's a massive overlook by Wall Street. But yeah, Anthony, go for it.
1 second, Tony, before you jump in, I'm going to give you the mic to free flow and comment on that. And also, same question goes to you. But Stock Talk pretty much got me really excited about and almost foreshadowed our spaces next week, which we are going to be purely focused on Tesla. Probably tweet that while we do this, and you guys can see the details. Have Sawyer Merritt, so that should be exciting. So it's really cool that Stock Talk mentioned Tesla, because I also have a tweet pinned above talking about the EV sales thread on the 4% today and potentially going to 40+% by 2030. So if you guys want to look at the data a little bit more in depth, there's a tweet pinned right above. I wrote about this, I think, around Thanksgiving. Along with one thing I did want to highlight before I pass to Tony, which I think is super interesting, in the two stocks you guys brought up, again, another pinned tweet. Apple and Tesla, I tweeted this October 21st, 1 year ago, both ran up into their stock splits. After splitting, Apple pulled back to $105, Tesla pulled back to $380. ROI since, this was, again, as of October, so this is actually more for Apple, but Apple was about 40% up as of October 21st this year, and Tesla was up 132%. And the reason I mentioned that is, look at what these guys are saying. I mean, these are some of, I think, the smartest people on FinTwit. They do deep research investing for quite some time. And you can keep this very simple, right? You don't have to overcomplicate the market. I mean, just look in the past year. You could have bought these names right like a year ago, literally, and still made significant gains and avoided having to deal with uncertainty, and also own something they can sleep well at night with. So I think that's very interesting, and it's very cool that those are actually the first two stocks that are brought up as something for the long term, and not too ironic because two of the strongest companies. But yeah, with that, Tony, the mic is yours on what is one stock, Tony. If it's not Tesla, if it's not Apple, what is it?
I'm gonna get to that in a second, but I just gotta jump in for a second with Stock Talk, because I love Tesla, and I'll be on next week talking about it too. But I just gotta say, one crazy thing, and then this is to the point of him calling it an energy company, is Elon said it'd take 5 gigafactories to just pretty much power the world, and cost about 3 to 5 billion to make a gigafactory. So it's pretty shocking to me that we can't just allocate 150 billion somehow somewhere just to get 100 gigafactories up and running for electricity generation. So I think that over time, Tesla's going to be making enough money that they might just completely take over that power network, right? And they've already made the solar roofs and everything. And just knowing that, I wrote an article literally saying Tesla's going to do all stuff in artificial intelligence and all this stuff in 2015. And I just think that one of the things that I wish I would have remembered then is that things always go further. I did the same thing with NVIDIA, and this was before we even had DPUs, and now we have DPUs back in 2015 or whatever. So just knowing that whatever we think that they're going to do in the future, if they're a great high quality company, they're going to be doing more than that. And then as you said, the analysts are completely off, and they've been off on Tesla forever. This is there's reasons for that. So just knowing that, I'm definitely in agreement. In terms of the stock, the most, I feel Rahul, you should know, especially at this price.
I do know. Should I guess it?
Take a guess. It's one of two.
Land of the Sea?
Land of the Sea. Yeah, I mean, here's the thing. Sometimes stocks that are high quality.
It's ticker SC, by the way.
SC, C Limited. But I've talked about this name, and there are a few companies that I just know and see, and just in my own opinion, think that they're going to be one of those companies that people have in a top index, or in that 100 billion or 200 billion range market cap that starts growing into the possible $1 trillion companies, because we once again have to move the goalpost, right? It used to be just wow, Apple hit $1 trillion, wow, Amazon hit $1 trillion, super crazy, those are the only $1 trillion stocks, but Tesla just hit $1 trillion, and so Nvidia is going to hit $1 trillion. So basically, because 40% of all the dollars were printed in the last 12 months, you've seen heavy asset inflation. As much as people want to say it's consumer-based inflation, it's, I think, in my opinion, far more in just asset inflation for many different things. And because people have to put money somewhere, and people have been investing far more in this last year. And so just knowing that the companies on that, of whatever that moving post is right now, of 100 to 200 to 300 billion, and have that high steady growth for the next 3 to 5 years, might have a chance of getting to the trillion, right? And those, barring certain exceptions, right now for SE, which is why I want to talk about it, are usually the easy sleep at night core base of the bonsai kind of wins, especially in this market moving forward, where either being cash flow positive or being very close to it, and spending a lot of money aggressively on building out, C Limited is doing, Amazon did in its early stage, and Tesla did as well. Those kind of are really the plays I'm looking for next year, just because knowing that things might look cool right now, people are bullish, but very easily change back. And there's so much uncertainty, even though, things are calmed right now. I'm telling you, in a week or two, things could just be hitting the fan again. You just don't know what's going to happen. Let's say, inflation starts rocketing, even though we're tapering. I don't know. You could have liquidity traps. It just ends up being a situation. So knowing that those companies are going to be the ones that withstand that. And once we've like really progressed in the taper, I'll start looking at like smaller names more so. But I'm just liking the fact that SE came down so significantly recently, and it wasn't just because it was a growth stock. It was because of a couple of reasons, right? Like you saw the strength in the dollar because of like the dollar was just ripping like crazy, and SC hates that because it's obviously an international company that deals with multiple currencies. But I'm looking here, like I don't know if people use Koifin, but I do like using Koifin just to look at the estimates overview, and you kind of see how like the stock will completely follow. Um, the stock price will over time follow where that sales and like EPS EBITDA goes, and like that's just I think the way that people are playing this market, right? Like I think we've moved back into that kind of market just because people just don't know exactly what's going to be happening in the next 3 to 6 months. And as things become calmer, then right, like once the conditions in the field is like not as wet, you can get crazier, and that's kind of I think how people are going to be playing this. So just looking at SC, knowing that it's a $124 billion company, and people loved it when it was 350, so you must love it at 225. It's actually so true though, right? You love the stocks when they're ripping and you hate them when they're down, and then you get scared to add them. But that's usually when your stomach hurts is about the time. And just looking at the sales here, like this year or in 2020 they did 4.38 billion. This year they're going to be doing 9.39 billion. Next year they're going to be doing 14 billion, and then the year after they're going to be doing just under 20. So last year's 92% growth rate in sales, 114% growth rate this year in sales from last year, like from COVID over the COVID, like they doubled it again, and it was even COVID this year, like most of this year. So like there goes your narrative of it being a COVID stock. It doesn't matter how something like gets started. Once it's there. Period. Like Tesla was like this was inevitable for Tesla. Like if you look at the amount of shorting and like once it got big enough on the gamma squeeze and everything that happened with the stock split and earnings and S&P edition, it's here now. It's a $1 trillion stock, and like these are kind of the situations that happen. If you look at Amazon, people were saying it's never going to be profitable. What a crap company. Now people are begging to have Amazon in their top five, and it makes up like 9% of the Nasdaq. So that's the way that these things work. And I think that like knowing that money is kind of stretched in terms like 1,000 is now 5,000 in your mind, kind of thinking in terms of valuation for companies, just because there are so many more dollars flowing around. And I'm not saying that like let the ratios and the multiples go higher. I think that those are supposed to be obviously negateful of each other. Like those negate, right? So like you'll know that 8.8 times forward EV sales is like obviously super cheap for a company that is expected to grow sales from 9 to 14 to 20 billion. So that's 50% growth, and then a 35% growth on 15 billion. And so companies like that's rare for companies to be able to scale that much in terms of growth percent at that size. And I also know that looking at the over time, like what has happened, they do miss on EPS a lot. And so that's I think why the opportunity is looking good right now, just because if you check out how stocks perform once they start posting consistent, profitable EPS, like it goes from a profit, a non-profitable company, an unprofitable company to a profitable company. And that checks a lot of different boxes off for people, right? Like there are some people who will just simply not invest in a company that's not EPS profitable. And there's many funds and mutuals and stuff that there are rules, right? Like the better a stock gets, the more people can get in it. So I think that, getting into a stock that's right before that kind of change, which is going to be happening next year at some point, where they're expected to get EPS profitable and then grow at that rate is what's really interesting to me, right? So knowing it's like 8.3 times next year's EV multiple, and 51 times EBITDA. So like the multiples on it look great, even though right it ran from 14 to 220. That the company behind the stock has gone insane. Like people have raved about this nonstop, and there's good reason for it. And I think also just like looking at the expectation of like how much they're going to be actually making. So in 2022, they're projected to make 805 million profit finally, or in EBITDA. And then their EPS is expected to start going positive at the end of 2023. But I think that it's going to happen a lot, or in 2023. I think it's going to be happening a lot sooner, just knowing that they've already invested and taken out a bunch of debt. And so all those things that they've been buying, which like they bought a stake in FTX, they've been investing in like banks and all these things that they've been working on this year were capital intensive. And so as those things have been being built out, I think that you're just going to start seeing a big inflow of profit that people are not really counting in right now. So if that company starts producing a 20% like net EPS margin, like that's going to be not bad, right? Like you're going to see that over time just because of the scale of its growth. And then like knowing also the entire just theme around the next year, 2 years, 3 years, like everyone should know I'm super bullish on crypto. But looking at SC just like, as itself right now and where it can go in terms of the metaverse thing, do you know Free Fire is like the hottest game like ever. And they also have like Call of Duty and like a bunch of other games, and they work with like the biggest games, and so it's all mobile. So like, what's the easiest way to access the metaverse, right? Like, do you have to go home, go on your Xbox, and like plug it in, or like could you just hook it up to your phone and just like go to Free Fire and watch the live stream that like 2 million people like attended online in the metaverse? And like, what if you can start buying your Fortnite skins and transferring them? And then there's like a games marketplace that they work with Tencent, who owns 25% of SC. So like, there's too many connections here. And they also made literally an AI labs to do things like this. They put $1 billion in a venture firm. So there's like stuff happening all the time for it. And so I'm super bullish about what's going to be happening.
Absolutely, Tony. And I think the pod has done a really good job of deep diving SE multiple times. I remember I listened to the one last November, I think it was early November. It was a great deep dive. So, yeah, I know you love SE. You can talk about it for hours. I don't know how long you just spoke about it, but really, really good information. Well, I do want to give a shout out. I think we have Avi. Actually, wasn't able to make it because he started a new crypto job, and I think he's been super backed up. But if anyone hasn't heard from Avi or want to follow him, definitely do. Avi, I actually want you to ask the next question and do what you do best, man. Get on the mic.
I think it's very appropriate. And yeah, I've been doing a little bit of traveling and just started this new job, so I've been heads down on that. But we'll be back with another podcast here. And to wrap up, this is a beautiful, spaces to do so, in terms of looking ahead. And that's kind of what we'll be doing on the next pod for sure. So, I certainly have learned a lot. I'm coming in from a retail perspective, and so I learned a tremendous amount, obviously, from Tony this year. And we've had ups and downs, obviously the last year with COVID, and, heading in now with the Fed, so I'd love to learn from some of you guys, and maybe Stock Talk, if you want to kick things off in terms of like what you've really learned in this past year, and like how are you going to take that into 2022, right? There's been tremendous amounts of information flowing back and forth, and so it'd be very interesting to hear kind of what you've learned from last year and how you're going to kind of take that with you in 2022. If Stock Talk's still with us.
I'm still here. Sorry, what was the question? What about 2022?
All right, we're going to stock market news if he was listening.
I'll repeat the question. It was pretty much the past couple of years have been insane, and we've learned a lot, right? So, what do you guys? What's one thing you've learned, and then how do you apply that, I guess, to your decisions? I think that was a question. But go ahead, Avi. Keep moving this.
Yeah. So just what I've learned going into 2022. I mean, this year, I did learn a few lessons. I learned about, hedging more appropriately on downside, especially my long-term portfolio. There have been moments where I was very well hedged and I was happy with my positioning. And then, we got some downside days in the market, and then I covered my hedges and then didn't re-add them. And that's caused some drawdown in my long-term portfolio a few times this year. Trading wise, I still feel pretty in control. I like I said, I function my trading account a lot differently than my investing account. My trading account, I value cash, I value buying power, I value the ability to be flexible, trade, smaller cap names or momentum names or sympathy names. And then my investing account, I put on the investor's hat. So that one I manage a lot differently. And I would say, from my perspective, I probably need to do more work on being a more efficient capital allocator in my investing account. But my trading account, I'm happy with the way I run it. I've done very well on that account for 7+ years now, and so it's been working very well for me. And I don't try to stray too much from my general strategy with regard to my trading account, because again, it works well. When it stops working, I'll adjust it. But for now, the trading side, I feel fine and I feel content with where I am. Obviously, I try to educate myself on different asset classes and different sectors and industries constantly. I try to read about a different industry every week and try to just educate myself on the way it works, and what the balance sheets of different companies in that sector look like and how they change over time, and what types of competitive advantages drive different sectors more than others, where free cash flow is more important, where it's not as important, things like I continue to try to educate myself. I want to become a better capital allocator from the investing side for sure. And I think, the chop this year has kind of taught me that. Like I said, there have been weeks where I thought I was prepared and well hedged and I wasn't. And there have been other weeks where I was very well hedged, but then I covered too quickly and, didn't reallocate those hedges when the market, went back up, which is when you should be adding your hedges back when the market's ripping, right? Because they're cheaper and the puts are cheaper. And So yeah, I mean that's generally what I would say. I just want to be a better capital allocator from the investing standpoint. But the trading side, I feel really content with the way this year and last year have gone. Granted, it's been a different environment, but yeah.
Any like mistakes that you've learned from? Because like one of my favorite quotes from Tony is like, you got to get better to get better. So everyone makes mistakes. No one's the perfect, investor or trader. So like, was there anything that you like maybe a specific stock that you had a lot of conviction on, and then you had to cover and you took your losses and popped off of that?
Yeah, I mean, there have been plenty of mistakes. Like I said, covering my hedges too quickly and not re-adding them. That was one. But with regard to specific stocks, there have been a couple this year. One that me and Tony really liked, which was SMFR, and I had to cut a bag on that one. That was a pretty big loss. RDW is one that I was very bullish on and have been very, very bullish on. And obviously, something like an earnings delay is not something that I could have predicted or could have prepared for or could have studied. That's just something that just happens. And that caused a big drawdown in the stock. That is the one bag that I'm still holding. Well, that and Planet are the two bags that I'm still holding. And so, I've learned lessons there as well, maybe to be more patient with regards to sizing my position fully. The thing with me is when I have higher conviction positions, I tend to rush into them, because you have that very human fear that the stock will get found and you won't get it at those prices again. Whereas with stocks like RDW and Planet, I clearly could have been more patient and found a better initial entry. So those were two mistakes this year that I learned from, just being a bit more patient, even on my high conviction positions, staying disciplined and scaling in and letting the price action come to me, rather than forcing myself into those positions or accumulating a full size position too early or too quickly. So those are two things I would say. Number one, scaling into high conviction positions more patiently. And then number two, once you do cover those hedges, add them back when the market's ripping, because that way you're prepared for any chop or downside that you see in there. So I would say those are the two main mistakes and main lessons that I've learned from this year for sure.
Very good. And Raul, we want to kick it to one more person for that question, or?
Yeah, give the same question to Evan and Tony, and then there's one more question after that before we get to audience Q&A. I do see a bunch of our friends on here. Shout out TSDR, I see you. Happy to bring KT, happy to bring some of you guys on once we have some open Q&A. And as I said earlier, as promised, I've pinned the tweet talking Tesla with Sawyer. It's seen above. We get a lot of questions on when these things are planned. Some of these are planned. I have stuff planned through February, and some is spontaneous. We've been going on a lot more often, just randomly, because there's a lot to talk about. So for that, I mean, the only way to see it if you're obviously following us, but with the flyer ones and the ones that are planned, those will be announced well ahead of time, and everything will be recorded and posted. But yeah, same question I think to Evan maybe next.
Yeah. So I think I started about earlier. First, I was trying to sneak in a little bit of dinner while we were on this call. Had a nice piece of steak, so got most of it down me. So I a couple things that I learned this year, and I think that this first thing isn't necessarily something that I didn't know before, but it was one of those times where I really kind of got hit with it firsthand and real life experience and lived it. That just because something is mispriced or whatever, just because something should be trading at this place, doesn't mean it has to be there. The old saying, the market can stay wrong longer than you can stay solvent. What really taught me for this was AMC and GME. And at the start, not necessarily the spikes that they went on, but the fact that it was able to hold at the levels that they were up at the top. And it kind of just really hit into that point of, for myself personally, there was a couple times where I took YOLO option calls just randomly out there and doing stuff. And truthfully, 2020, I was rewarded for that. I had a put going into February, March, luckily, and then I had some calls coming out of it. It was a pretty good year for those kind of reckless call option plays. And 2021 was a year where, it really hit home that that's not my game. To stay in it and what I'm good at, and not necessarily the short-term trading aspect of it, which is something that I do want to work on for going forward, the trading and maybe the selling part of it. But the making these trades without the necessary due diligence on the back end. When I'm doing my long-term stuff, I am super careful with it. But a lot of these shorter-term YOLO trades, which kind of got conditioned into me and to everyone else that was working in 2020, kind of stopped and not doing it as good this year. So definitely that, and not trying to predict the market in the short term, but really just kind of hitting home that just because something should be at X doesn't mean it's going to happen tomorrow. Plenty of time can happen. A lot of times the pathway to lead through a lower place. A lot of times the pathway lower leads through a higher place. But overall, just again beaten down with that.
Awesome. Tony, you want to conclude there before we go to our last question? What you've learned this year? I know you've learned a ton.
Yeah, man. I just want to say like both what they said was things that I was going to say as well. So like definitely, and this has been something that I've always like kind of struggled with, but I think 2020 brought it right back out, and then 2021 made it like regression to the mean of being early for things, right? Like things actually take longer. And even though you can have the full conviction and going to get there, like I had to wait 5 years for Tesla, and then I thought that I like learned my gauge on things, but I mean I fully echo those thoughts here of like things will take longer to get to where they're going, regardless of how good of companies they are. So knowing that, and then knowing that like in the short term, the market is just rewarding things that while are boring and basic will still be profitably yielding. And so like I think there's going to be opportunities all the time. Like you always see things retrace to the VWAP, or like you'll have a full on correction in like all these growth names, and then you'll get just a March 2020 VWAP bottom and like volume shell, you get a big news change. So like I think there's going to be plentiful amount of opportunities next year, and like probably more, I guess, in terms of volatility than there were this year, just because as we unwind and as conditions change, and we just delve further, everything we did during COVID, like I think it's important to stay more nimble, and that just means like having easier stacks of liquidity. And whether that means like, I'm not saying like more cash, but I'm saying like use just like good, because it's like super easy to chart things like IWO or like IGV or IHI. So like those quality indexes that will move so similarly to most of the names that like you like to buy, like growth and like high, not like high spec, but like growth and not the fully Amazon free cash flow, huge net profit positive kind of companies, but more like the SEs, the Squares, the Rokus of the world and stuff. That's not managed like awfully like honestly like ARK is being right now. If you just think like those easy plays, and we've all discussed that on Pine the Table, where like IHI, IGV, SOX, like semis, and like using those as like liquidity reserves versus like as thinking of them as like long-term investments, because they will always maintain the most liquidity. Like that's where most of the options flow goes. That's where most of the people who are trading stuff will be looking at, and like most people who just like buy stuff and don't look, that's what they're doing. So you have like less, I guess, difficulty in predicting moves, and then you get opportunities like this, where things will pull back. And I'm not sure you'll get like another huge, crazy like SE down 50% kind of move, and maybe the next one and the worst next one will be down 30%, and then it'll start moving like Amazon. So I'm saying that like I think that the opportunity now can be really well taken advantage of if you just use the lessons from last year and know that like next year is going to be a lot of what the end of this year was. If it gets like bad again. So just kind of staying more nimble and not being afraid to like change very quickly, and then just wait it out.
Nice, nice. Thanks for sharing that, Tony. I guess last question before we go to audience Q&A. One thing I found really helpful. Again, my account wasn't 8,000 earlier in the year. I was like 400 or 500, and slowly just started sharing some of my investment thoughts once I switched jobs and was actually allowed to free up and talk a little bit more on Twitter. But while I was doing that, I came across all your guys' feed. And I think one thing you guys all done is build a unique way of contributing and breaking down investments in a very wise manner. And I think I could, give each of you a compliment in different areas, whether it be stock talk on, his thesis he kind of shares before he takes a trade. He doesn't just pump a random trade. Stock market news. Evan has, I think I joked with him before. I've worked at Bloomberg, and it's pretty hard to compete with such a competitive financial news source. I see the systems we built there when I was working there, and this guy's absolutely crushes. And Tony, right, with the style of the due diligence that you do and some of the names that you pick, and also just like the way you can navigate, I guess, multiple asset classes. It's insane, while staying an innovator and staying true to your beliefs, or just trying to lift it towards another day and stay active in terms of managing your account the best way possible. So how have you guys, I guess, again, whoever wants to take this first, how have you guys built your Twitter, I guess, handle, and been able to contribute to FinTwitch? I think, there are people probably in the audience that want to get better and get their voice out. So I'd love to hear from that. I think all of us were, much lower in terms of following and account like growth early in the year or even last year. So we'd love to kind of just hear your thoughts there before we wrap and go into Q&A. So whoever wants to take that first, kind of open for anyone, and how you kind of built this up.
I just ask people what they should want for lunch, because I feel like everyone just eats lunch constantly, and so that was kind of my angle, is I would ask what people wanted for lunch. just getting there. Stock Talk, you can go first.
Yeah, I mean, for me, so I've been on FinTwit for probably almost a decade now. I was on a personal account, which obviously nobody knows about, but and last year, kind of coming out of the crash, I just saw a lot of pumping and nonsense and like people not knowing what they were talking about, presenting false information or even worse, misleading information, and just really, to me, FinTwit is such a valuable resource. There's people I follow, like you, Raul, Anthony, Stock Market News, people that are providing valuable information, and it's a great place to learn financial literacy. I mean, to me, it's like one of the best resources in the world, really, if you follow the right people. But the issue that I saw last year was that there's just a lot of nonsense and a lot of people that were tweeting tickers with gifs or rocket emojis and like calling that enough. And granted, tweet whatever you want, but that kind of seeing that annoyed me, and seeing like all of these new traders, thousands of them, falling into these traps, falling into this influence game where it's like, oh, somebody who has a big page like it must be calling out good ideas, which is just not true. And so seeing all those people getting roped into it really bothered me. So last year in August, I made this page, and I just started tweeting ideas, and I tried to provide context for the ideas. One of the first quote unquote trade calls I made last year was when I first started the account was buy Tesla when there's stock. Literally the day they split the stock, I was like, this is going to rip because people think stock splits don't matter. But
that was one of my best plays last year, bro. Good on you for being on that too. That was a fire play.
Yeah, I mean, it ripped 60% like a month coming out of that split. So, there was that play I called, and then a bunch of other like just good plays. I mean, I told people to pick up Lucid at 11, and there were some good plays I made early on when I had a small account, and it kind of just grew that way. I mean, I think the best way, and this is going to sound super simplified, and it might be irritating to some people who are trying to grow their accounts, but I don't retweet other people's tweets or do like follow Friday with 50 people tagged. Like I don't use gimmicks to grow my following. I just tweet. And I tweet stuff that I genuinely think, and I try to be as honest and thorough as possible. And that's what helped me grow. I mean, just putting out good ideas, quality ideas. Have I had misses? Of course I've had misses. Of course I've been wrong on a number of stocks, but I've been right on a number as well. And so, just putting those ideas out there and kind of garnering respect and appreciation from the people that follow you, that kind of spurs this word of mouth movement, right? Like I've never promoted my page. I've never advertised my page. I've never like done any kind of promotional partnerships with any other brands or platforms. Like a lot of the other bigger pages, I've just purely tweeted. That's it. And just tweeted good ideas, tried to make my content a little higher quality than what you typically see. And I mean, my following really kind of just exponentially grew from there. I mean, going back to the end of last year, I had 1,000 followers. In December of November, December last year, I had like 1,000, 1,500 followers, and now I have 120,000. So, and the great thing is I have good interaction levels too, good engagement levels, because I try to respond to the people. I don't get to every comment and every DM, but I have my DMs open. I try to respond to as many DMs as I can. I try to respond to as many comments as I can, and just make people feel like they're valued and engaged with, and paid attention to. And then on top of that, just continue to provide my own ideas in the most honest and thorough way possible. And like that's literally been my only strategy to grow this. I haven't done any marketing tactics or gimmicks or anything like that. And I think that's the beauty of Twitter. Like unlike other social media, people can retweet your tweet, and people can like your tweet and comment on your tweet, and it creates this engagement narrative that can spread to other people more quickly. And if people are making money by following you, they're going to tell their friends, and they're going to tell their family, and that's how you get those ramp ups in following. Where I mean, like going into this month, coming out of November. In November, I mean, we added 30,000 followers in November. So like if you're hot and you're hitting stuff and you're making good calls and the market's hot, your followers tend to go up. But another thing I've noticed on FinTwit is when the market's rough and a lot of stocks are red, your follower count probably isn't going to go up that much. So, for people who are trying to build pages and build exposure, be yourself, be honest, be thorough, and be competitive to a degree too. Look at the other content around you and be like, hey, I want to provide better content. I want to just post a ticker with a GIF. Like I want to provide a thesis, whether I'm right or wrong. I feel way better. I sleep better at night knowing too that I'm not just shilling garbage to 100,000 people. I sleep better at night knowing that I'm like, hey, this is my idea. This is why I'm taking it. If you want to take it, go for it. Don't. But like,
yeah, man, totally fair.
On telling people, hey, do not slap the ass on my ideas. I tweet that at least once every 2 weeks, saying do not slap the ass on my ideas. Don't just buy a ticker because I tweet about it. Buy a ticker because you like it, and whether or not you use Twitter as a scanner to kind of gather a basket of ideas, that's fine. But do your own work on it as well, so that you can sleep better, you can have your own convictions, you can make your own executions. But yeah, I mean, I could go on and on about how to grow a page, but I think in a nutshell, that's it. Really just be yourself and be competitive with the content you post. Like, put out better content than the guy or girl next to you. And you'll find that people will cling to it and people will interact with it. And that's what's really going to grow your following.
Yeah, no, if you're not following Stock Talk, I think he's definitely made a valid case for himself. I can attest to everything he's saying. A very, very great account, and I'm glad we've crossed ways. I definitely want to hear from Evan, man. What's the magic trick, dude? How do you find every news source before the entire street, man? How do you do it?
We could go into that, but honestly, I don't know if it will affect as many people. I mean, maybe it will in the spaces, but I would love to touch on thing because honestly, I don't trade that much long-term investing. It's not like I do definitely do my due diligence and a lot of that, but really first with it, I realized that I'm a content creator in this, and a lot of the points there I would echo. I've created multiple accounts on here. This one, Arc Daily, Bullish Rippers. I run a bunch of accounts on here, and there's a lot of things that you can do on the back end to gain followers and gain a following. The number one thing is being yourself. When you're yourself on here, you can do it for a long time. And the real thing that it's going to come down to is consistency. So if you're doing something that's just not you, you're not going to be able to do it for a long time. And the number one thing for any account that's up here is the consistency of doing it all the time. And kind of, I've been doing this for a year and a half straight. A lot of the biggest news sources have been doing this for 3-4 years straight. It's a timeline. I think that taking a step back and finding what you enjoy, what you can do, what you're good at, and kind of really going in there. There's a lot of different ways you can attack it. Ultimately, I think the biggest thing that the Stock Talk said there was that you got to be competitive with it. I'll take it a step further. FinTwit, growing followers is a huge game. It's one giant strategy game, and truthfully, if you're into trading stocks and you're into that area, you're probably going to be into it as well. The whole strategy aspect into it. Put in time looking around FinTwit on what type of work, and then changing it to make it better. Trying to think of those core ideas, trying to do anything like that. Like honestly, Spaces has been something that re-accelerated the account recently. So hopping on these new trends, staying nimble, like trying to figure out the small things on Twitter, whether it's like I see so many people just tweeting out the tickers. Like when they're talking about Apple, they'll just tweet out ticker AAPL. But what Twitter is, how people find your stuff is by searching for keywords. And so many people that aren't those hardcore investors search for Apple, not AAPL. So you're alienating a huge part of your audience. Just those small things in there of really what your core purpose is and who you're trying to reach, and really trying to center your wording around that. There's so many little strategies behind it. Like if you really want to grow your account, you can go and be a reply guy, put on notifications for a bunch of big accounts, and come up with good replies quickly. That will help you. Having a core set of people that you interact with who are around your size and kind of trying to do similar things is a great strategy. Kind of have those friends and those interactions. One of my favorite things with Spaces was finding, at the start, it was kind of difficult because I would just go live and it would just be me and 2 or 3 other people, but finding that community of people around me, like-minded people, who not necessarily think the same way in stocks, but think the way what I'm trying to do on the Spaces and putting on a show. So that's been really great, trying to find people to help you and, play around, test things. That's one of my favorite things about social media. I do delete posts sometimes, and for people with notifications on, what I do, maybe it's not the best account for it, but test things out. As long as you're not pushing the edge and doing bad stuff, like and tweeting bad, like you can just kind of get away with it. Okay, if a tweet didn't work, okay, you delete it. X amount of people saw it and they'll forget about it. But you're gonna find some bangers in there that you didn't expect. I'll leave it with this: is my biggest tweets that I've ever created are not ones that I think are going to do huge. Sometimes I'll go and beat Elon Musk or whatever, try and do stuff, and I think, oh, this is an amazing tweet. I put so much work into this, and then it does good. But the real bangers tend to be ones that you don't expect. So, keep trying, keep fudding forward, keep paddling along, and consistency. Stay at what? Sorry, I'm going to step back one last thing, and then I'll be done with it. You are much better off tweeting out 1 time a day as opposed to tweeting 3 times today, 0 times tomorrow, 0 next day, and the next day, whatever. Whatever you can do, spread out when you're posting. But yeah. There's a
Agreement.
much
A lot of
a
good,
bunch
a lot
more
of
in
good
there, but
points.
I think that's
Yeah,
great.
no, there's you can write, you can have entire spaces on this topic. I know we're
That
doing
was
spots,
awesome, by
but
the way. That was really cool.
I find it kind of cool just to hear people's story and journey on Twitter. I know Tony has actually tweeted about this. I've pinned a couple tweets. Tony, do you want to wrap things up there, and then we'll take some audience Q&A right after that on stocks?
Yeah, I think there's two ways you can do this, and like I don't know, like just check out the things I tweeted above because like I always see this, I always see people trying to be people that they're not, and like it was so well said before me, but just to like hammer it home because it really is true. If you don't like what you're doing and you don't like what you're tweeting about, you just simply tweet about it. Like I don't ever think before I tweet. Like sometimes I'll do a tweet or two just to like prove that if I wanted to. Like I'll give you guys an example. I'll let you in on some of the FinTwit 4D just because like you got to test things out. Like I wrote this thread on SE like how to invest 101 or whatever. It was my most tweet. It was like perfect FinTwit framework, right? Like you do all the things, you provide info, you tag other people, this and that. And the reason I did that was just to see like what people are wanting to see, right? And then like I realized like, I know a lot of people do that and it's pretty good and it's like a great way to grow your following. But I also realized that like that's not the way I like to talk. Like I don't like to do like that kind of like like it's just not me. And so like while I know that that's going to be like I know that my following will get way bigger. Purposefully, like call them following because, like, I just want it to be a good mix of good people who just want to like open-minded, share ideas, and like don't really care who follows or unfollows me. And like I typically like go and delete like bot and fake accounts just to like trim the crop. But I do want to say that like what you guys were saying is so right. Like you have to just be completely like authentic and like don't be afraid to like not just like be yourself, but like show yourself because like people don't want to just like get behind like some corporation or something like the reason why like Stock Talk Weekly and like the way that they talk and the way that they, like you can it's like a person behind there, you know what I'm saying? And so like that's how you grow. It's like people want to know like a connection because like it's trust, right? And like I do want to say like there's a lot of people that follow people completely blindly, like and like I'll just shout out and stick up for like Anthony Einhorn. You guys should not have like a lot of FinTwit was very wrong about that, like and that just shows like how people just not really thinking about what's going on, right? Like if you look at IonQ, it went from 10 to 7 then to 30, right? So if you didn't expect like a similar like spades say play to possibly do the same thing even though it was said, like that's on you, right? And like taking the play in the first place is on you. And so like all people are on here to do, and like you should be one of these people, right? Like you don't want all that like on your back kind of situation. And also like people just won't do it because you Twitter and like let's say you're like trying to buy crypto or like how like our parents or whatever buy crypto, they're just like cool Shiba doggy coin, and that's like kind of what goes on in stocks, and that kind of is what goes on in everything, right? So like I think it's really important to just like think for yourself and like be yourself, and literally don't be afraid. Like if somebody like rolls whatever, like disregard, but like if you want to say something and you want to comment on something and you want to have this conversation or DM somebody, do it. Like literally the worst thing you're ever going to get in life is a no, so just send it and message whoever you want, like connect with some people because most people just want to belong somewhere. And if you're on social media, your whole point is to find a place to belong, if not like create a place to belong. So you just got to get with it, right? Like talking to people is the only way that's going to happen. Being active, it's just like I don't know, like you're rushing a frat or like you're doing like anything, like you're trying to get into a country club or whatever it is, getting your kids into like private education that you need to get, whatever it is, like you have to like work and like make your connects and do your thing, and I think that's just like part of the game, and like that should be natural. Though is what I'm saying. I'm saying the framework is like the same for anybody. It's just like you got to put the dots together and just like make your path that way.
For sure. I think that's a great way to end kind of the first half or the majority of the space. We'll definitely get into some Q&A now from the audience. We've been getting bombarded with questions the entire time. I've had to X out everyone that's requested. It's nothing against you. We just had some questions that we wanted to go through before we got into Q&A. Before I call people up, again, give these guys a follow. They contribute some great information, and they genuinely get like everything they've said is they stick by it. I've seen it. I've followed them for quite some time. So definitely give everyone a follow. Pounding the Table handle, you have that as well as the host. Big shout out to them for the community. They're trying to build up founders as well. So with that, what's going on? I got you on the mic. Is one of the smartest macro people on here, so feel free to chime in on any questions as well. And if any of you guys need to jump anytime soon, feel free to ping me. I do want to give the audience a chance to ask some questions, but I do know we've been running for about an hour and a half. But again, before you guys come up, be courteous. We're not going to give you any buy, sell, hold recommendations. And try asking a question that would make sense to answer out loud. And be respectful. Don't come here and pop a Discord, or yesterday someone gave us a Shakespeare's poem that they made up, Tony, if you remember. So we've heard some
That was
funny
actually
things.
nice, though. You know, he was
It
saying
was
good
nice.
stuff.
It was nice. It was nice. But again, I'm not here to kind of hear lectures. I have, I guess, my parents for that. Let's just keep this to stocks if we can. All right. So with that, I don't even know where to start. So many requests. Maybe if you guys come up, maybe you can direct your question yourself, or we can just keep it open and let anyone answer. But let me call up a couple people. All right, Patrick, if you want to go first. What's up, Patrick?
Hey guys, I just want to say thank you because you guys are professional. I follow very few people. I actually have too many people that I'm following currently. I don't have any followers, and that's by design because when people follow me, I block them. I'm not a people person, but I love listening to you guys throughout the day. And I've been able to keep my account green over these past 3 weeks now, which is awesome. And it's a testament to you guys that you do have the amount of followers that you do, even though others have as many followers as some of you do, and some might even have more. But you guys aren't used car salesmen, and hopefully there aren't any used car salesmen on this call right now. I don't mean to offend them, but you guys are doing work. You're not just putting stuff out there like I think it was Stock Talk said, with rocket ships and gifts and everything else, and no financial reason to follow that play. So you guys are resonating, and although I'm not a people person, it's nice to listen to you guys because I DM Stock Talk already back in the 1980s. I'm thinking myself when my father and I would get out of school. I had my dad as a senior for accounting in high school. We'd watch Financial News Network, and this is kind of what this reminds me of now, except in the 21st century. So the question I have now, though, is now that we all banked, hopefully we all banked today. It was a nice day today. Are you guys expecting a dip in the morning, or are you expecting the rip to just continue in the pre-market?
That's a good question, man. And also, thanks for saying all that. Like, I love hearing that. Like, it make you a people person. I'm not a people person either. Like, I just have to be on the mic all the time because Avi makes me. But yeah, I mean, I'm thinking that tomorrow, like, what I'm looking for and what I'm hoping for is either a big rip where, we have the indices just continue what happened today, and like a lot of stuff already up after hours. But if we are down, like, I wouldn't mind at all to be down a little bit. Like, we did have a very aggressive move, and it would be much better to go, like either like a red to green, and then you can see like that would just be based on like rotations. I think that you saw a huge rotation kind of starting to happen into ARC and growth names in general. So, I wouldn't be surprised if like SPX isn't the super telling thing. But there is also a call wall at 37.50. So I don't think we're going to go over 37.50. I'm like 98% like it. My 2 cents is like 98 cents thinking that we're not going to go over 37.50. But it is possible that like if we do break that and like it's already Friday, we can just keep squeezing because that would just people would they have the spread on there. I don't think that they want to like. I think 37.50 would just end up being the wall just for that pair trade. And I think Tick just posted this really interesting tweet, and I think he's totally right because there used to be this massive bid at SPX 4000, obviously because like psychological round number, but now there's like this massive bid at 600 and it moves up. So like if you think of, I don't know if like, it's just the staggering up prices, like, you have a big order at 4,600, then you have like a little bit bigger or a little less, a little smaller order at 4605, and then you have a little bit smaller at 4610. So, right, like that's the way that, flows look in the market in terms of like what's being bought and sold. But that's just moving up, right? Like the people are like wanting to take on risk, especially in SPY. So I'm bullish on the general markets. But I wouldn't be surprised if we do have like, a muted day in terms of like the actual index and like let tech rip and IWO. And like, I think IWM should be the one to like look out for, because if that's like, continuing to rip and reverse, we'll get a really nice continuation. But, I either like a big gap up or slightly red to green kind of situation that shows a rotation.
Yeah, and I'm going to shut up after this because I know there are other people waiting to get on here as well. But I've been spoiled because I don't unlike a lot of you guys, it sounds like I basically go to sleep almost all the time 100% cash. I became a day trader only because I don't have the stomach for the volatility sometimes. And thankfully, I'm not bragging, but thankfully my account is up over 35% this year, and I've been able to, like I said, just barely turn it green today over the past 3 weeks. It's been kind of rough. But I got spoiled when things were 100% bull market for however long it was. I was just buying dips because if you just bought dips, you knew it was going right back up to where it was before because the whole market.
You and everyone else. That's why this happened. Like,
Yeah,
all of us.
And that's why I'm joining this premium service, because even though I'm a former finance manager, I got burnt out working in finance, and I hate even looking at numbers now. And I just use my iPhone to look at what's red, and I buy, and then I turn out green at the end of each day, mercifully, right? But I need to learn some TAs, like how to set up some stock charts and
Yeah,
whatnot. So
I got
that's
a good resource
what you
for
guys
you.
for.
I would check out, TrendSpider, great resource. I think we all definitely kind of use those charts. And then I would also just check out at Alpha Trends. The guys, he's got a
I'm
bunch.
checking the TA here. 30 minutes RSI is 60% and 1 hour RSI
Hold on.
is
Go green.
70%.
I didn't call
Yeah.
on you, go green. I'm going to remove you. Try being respectful. Like, what did I say in the beginning? I'll call on you if there's a question. And trust me, I'm a really nice guy, but that just pissed me off. Sorry, go ahead, Tony.
Yeah, I was just saying to go follow, TrendSpider, and then at Alpha Trends. That guy's made a bunch of really great indicators. Like one that I use all the time is like the anchored volume weighted average price, or anchored VWAP.
Yep.
And he's got a bunch of videos and cool stuff to show you how to use it. So I would definitely go hit up his YouTube and hit up TrendSpider YouTube, because like the best way to learn is just to watch other people do it, and then try it out yourself,
Right.
smaller, and then over time just get better at it.
Yeah, because I
I'm
looked
still
at
getting better at it.
Thinkorswim. I looked at Thinkorswim, and I'm like, I used to write macros in Excel years ago, and I don't want to feel like I'm writing script again. So I needed to find something different. So I just wrote
This
the
thing is
thing down.
seamless.
Thank you.
Awesome. Hopefully that answers your question, Patrick. Thanks for coming up. Thanks for kind words, man. I'm sorry I'm going to have to remove you as a speaker just to get more people up, but thanks a lot for listening, and thanks for joining in. Really appreciate it, man.
Thank you.
Hawk Dove, do you want to go next?
Yeah, hi, Rahul, and hi, everybody. So, I recently started joining Twitter, and just to see how this FinTwit things all work out and all. So, one thing which I'm a little bit worried, going back to the topic, which was like adding a follower and all. Just a quick question is, like, I might have 16 followers right now, okay, just for the example, but all of the 16s are trying to hack me for some crypto selling thing. And everywhere is just like somebody will change one letter, and let's say the stock talk weekly, somebody will change. So how do you solve this problem?
It's insane.
It's not. It's Twitter, right? Like Twitter won't verify so many people, so you just have to be cognizant of who you're interacting with. Like always check somebody's profile, make sure it's actually them.
Yeah, sometimes you are in the. It is like I have pretty good experience in terms of maturity and all. But when I try to follow somebody, I have some faith to follow that guy, and then if somebody responds, it's very hard to cross check whether that person is responding is same person or not. Sometimes you just miss it because photo and everything is same.
So Hawk, I just put out a tweet on this too, actually, because I had people, I have my premium service coming on Friday, and so I just put out a tweet about it, and then, instantly these scammers came out of the woodworks and started DMing people about, offering a $2,000 lifetime subscription or whatever. Like the reality is most, at least the bigger pages, like, and I don't mean this in an offensive way, like, we're not going to come and DM you individually and offer you things like that, right? So if you're getting DM'd directly, that's one red alarm. The other one is, I know that sometimes they just change an I to an L or whatever, and you can't really tell the difference between the handle. Make sure you're clicking into the page every time somebody's asking you, checking how many followers they have, checking if it's a fake account, checking their interaction level on their posts. If it's all like 0 likes, it's probably that they're just retweeting. Like some of the, I have like 30 or 40 imposter accounts. Some of them will copy and paste my tweets, and then other ones will retweet my tweets, but they block me the second they make the account so that I can't see it. And so it's hard for me or any of the other people that have those imposter accounts to go and manage those independently or report them independently because they block us. So, it sucks that Twitter has been so lazy with this verification stuff, but just be careful and try your best to, I know immediately you may not be able to tell if they're fake or not, but go and click into the profile and look and make sure that it's not just somebody pretending to be me or pretending to be Anthony or Rahul or whoever else. And so it sucks that it happens. Trust me, I hate it. Everybody who's on FinTwit has had it happen, and it sucks. But there's very few routes to prevent it other than just being careful and double checking and triple checking.
Definitely. And then just one more thing, just like practice safe, like best practice, like to not give somebody, like, if you're going to give somebody money on here, you better have a contract, right? Like the things better be like legit. Like I think that there's people thinking that like, Twitter, like you can't like trust people really ever, like in business. And so like, just make sure that if somebody's asking you money or some chat room or something, like do your due diligence as if you're buying something. Like just because it's investing in like your less because you're using that money, you expect it to go up or down. Doesn't mean you should be stupid with it in the first place, right? Like just in general, to not give somebody like crypto, just like why would this like send somebody randomly crypto just because they start
No, no.
DMing you,
Yeah, I
I don't think
understand.
it's no,
So,
I'm not, and I'm not saying this to you. I just like in general, I just want people to really just like
yeah.
know that like this is a great place for people to get scammed, and I've tried my best to like make a bunch of tweets saying to people to like just be careful and be cautious and watch out, but like it's gonna happen, right? Like people get scammed in the real world all the time. It's infinitely easier online when I have a monkey as my profile picture, so like I totally understand. It's super difficult, but I just like want everyone to just really really think and just not put themselves in a bad spot. Because there was somebody who DM'd me and almost like really did send money to a scam, and I was just felt really bad because I'm not on here like I don't care how many followers I have. I'm not on here to try to like have somebody get hurt. So just know that like nobody's intentionally like I'm not making my own bot accounts, right? So like there's people just out here who are trying to take advantage of people because everyone's trying to make money, and everybody thinks about the quick hit of like the magic pill that'll make you make money. Like just be careful because like if it sounds too good to be true, it just really is. And I just don't want anyone to get hurt.
Cool. Thanks for that question, Hawk Dave or Hawkdo, sorry. And definitely a valid question. I think the DM part that Stock Talk mentioned is very true, right? Very unlikely that someone DMs you and then talking about borrowing money and stuff. I think that's just the easiest red alert, and it's I guess each of our responsibilities, right? Trying to navigate Twitter, just that's kind of the platform, and just trying to be careful. So thanks for coming up, Gambling Ape, and Luca. I sent you an invite if you want to come up. Gambling Ape, go ahead.
Hey guys, thank you for hosting the Twitter space. Just a brief question on how you guys learned the technical analysis size for a beginner. What resources are best to follow?
We actually had a space on Sunday morning, last about 2.5 hours, which we will be posting pretty soon. That actually was one of the questions that I asked the speakers. KT was on, Tony was on, as well as Luca, on some of the tools they use and techniques and how they learned. So I would definitely suggest you to listen to that. But if someone has something here, we'll post that soon. If someone has something to share.
Like a second ago, just the Trend Spider and check out at Alpha Trends. Go on their YouTube. I'm telling you, like YouTube's worth more than your college education. Just face first, dig in, and once you know where to point, and just keep looking at what they have, all their content. So like Trend Spider and at Alpha Trends. That's the guy created the VWAP, and I live by the VWAP. So check those two out.
Yeah, I mean, whatever you kind of do, right? Like, just do it consistently. Don't shift from one to another in every 3 months and say, oh, this is working better and this is working better. By the end of the year, you'll be stuck with like 5 or 6 types of analysis, and you'll be like, okay, one indicator is telling me one thing and the other is telling me something else, and you're like, what do I do now? So just stick to one and go with that.
Any other ideas at Stock Talk? I know you're a pretty active trader. Anything from your end? Maybe Stock Talk's not on, or maybe Mike's not working. But hopefully that answers your question a little bit, Gambling Ape. Like I said, we'll post the episode. It goes into some more tools very soon. So hopefully that'll help you as well.
Thanks, guys.
Yep, you're welcome. Who's next? Akib? What's going on, man?
Hey, Rahul, what's up? Definitely he's been talking to you. I was on the space a couple days ago, asked a question about, what do you guys want to see from the Fed? Anthony Roll, you guys are actually spot on. So I want to give you a huge shout out. I asked what you wanted to see, and you guys predicted exactly what you guys wanted to see and kind of what Paul did and kind of how the market's moving. My question is, about half an hour ago, or maybe longer, I've been listening forever, we started talking about like Tesla and the EV market and the growth. I guess my question is, because they also entered, it's more around Lucid and their potential for 2022 and beyond. They actually entered the NASDAQ 100, which is actually interesting for a company that just got
December 20th.
Yeah, I mean, that's insane for a company that just got public and actually reported their first like cars are in November, started delivering those, and now it's a huge growth stock. And I don't like getting caught up in the whole trolling where everyone's like, oh, the Tesla killer, then you get the Lucid and Tesla fanboys. I think there's enough market share for everyone to grow and keep growing. Like Tesla's going dominated. I think Lucid could take some of small market share in that. Like, just wanted your thoughts on EV market and maybe Lucid as a whole going forward as a maybe potential growth stock in 2022 and beyond.
So I have a thread pinned above talking about the EV market in general that I mentioned. So I'll certainly check that out because it talks about all these players and the growth of it. And you're spot on there that Tesla's certainly at the forefront, but there is going to be room for multiple players. Stock Talk is actually, I don't know if he's here, if he can hear us, but he's really eloquently put this forward many times on, in this space, people that have the companies that come out with a competitive advantage and execute on that are going to be the ones that take a piece of the pie. Obviously there's going to be multiple players and several people trying to take a stake, right? So Tesla will be Tesla, but then you have Lucid with the IP mode that they bring. You have some names in China and the companies there that they're trying to, obviously take market share. So I think the biggest thing is what competitive advantage does that company bring, and can they actually execute and scale the way Tesla was able to, right? So with Lucid, we know there's a competitive moat. They have to defend it. They have to execute on it. They have to scale. They have to expand. They have to still a lot to prove. But they have something that they can actually work off of in terms of the range, the battery, the team, the management that they have there, and also the balance sheet in terms of monetary backing. So yeah, I mean, there's a lot to be seen. I think we'll cover that topic a lot more, obviously, in our Tesla Spaces next week as well. That's going to be primarily around EV. But Stock Talk, are you there? If you want to chime in.
Sorry, I was in the
Sometimes
shower. I literally just got out, but I heard the end of that. It was about Tesla.
No, the question was about EVs in general and Lucid, and if they can take a piece of the pie. Okay, if you want to rephrase your question, Stock Top, I think is
No, yeah, I kind of get what you're saying. Just the competitive layout of the EV environment.
Exactly. You've answered
Yeah.
this question 100 times.
Yeah, I know I have, but I mean, I can give it in a nutshell. Look, I mean, electric vehicles is a space that I've done a lot of work on. I mean, I've probably done hundreds of hours of research, not just on Tesla, but battery technology, the difference between manufacturing facilities, all this stuff. So I consider myself pretty versed on the competitive environment as well. What I'll say is this, the legacy manufacturers definitely have a place in the mix. I think there's no doubt that GM, Ford, Volkswagen, BMW, etc., will sell millions of electric vehicles. The question is, from a trader's perspective, right, or from an investor's perspective, you should be less concerned about that and more concerned about the potential upside in the value of these stocks. And that's where I think the real caveat is, right? Like, when you look at Tesla, for example, versus legacy manufacturers, I mean, they're pushing like a 4x higher gross margin per vehicle than any legacy manufacturers. Their R&D spend per vehicle is like 6 to 7x higher than any legacy manufacturer. And then when you look at other players like Lucid and other EV startups, you really have to be looking towards competitive advantages that are off the balance sheet, right? Because granted, we said this earlier, right? If you're looking at this in a fundamental vacuum, if you're looking at electric vehicle companies in a fundamental vacuum, they're all overvalued, right? And, I think me and Evan have actually spoken about this before. I think companies like Ford and GM and Volkswagen would get much higher multiples and much higher valuations if they either spun off their EV divisions or just renamed the companies entirely. That's a separate conversation. But the reality is that these smaller companies, whether it's Lucid or Rivian, are they overvalued? Sure. Are they undervalued? Whatever. It depends on your perspective. But they're driving higher valuations because they have discernible competitive advantages, right? In Lucid's case, it's the EPA certified best-in-class battery technology. In Rivian's case, it's the Amazon partnership, which guarantees these large-scale orders, which will likely keep them afloat in the early years, which is really the hardest thing to do. And then when you look at all the other players, the reality is that 90% of these companies won't survive. And it's not necessarily because of consolidation. It's not that they're going to be acquired, although in some cases they will. It's simply that there's just not enough consumer discretion that can drive that many different brands. I mean, if you look at the history of the legacy automobile industry, right, like very few brands survived. GM, Ford, Stellantis, which is obviously, Chrysler and the partnership, but, a few of these other ones that have survived, at least domestically, there aren't 50 car companies that thrive and sell millions of vehicles, and it's going to be the same way with electric vehicles. Tesla likely won't go anywhere, and companies like Lucid and Rivian are going to have to execute and be able to leverage those competitive advantages, right? The second that somebody comes up with a higher mileage battery or better specs than Lucid, they lose that competitive advantage. So can they maintain that? Can they drive that further? And then can they leverage that to gain market share? Huh?
I like that pun. I just wanted to answer that question of like, can they do it? I think so. I mean, I think the biggest compelling thing for Lucid is the connection to Saudi Arabia. Like, I think that's just the most understated thing ever, just because knowing like their relationship with gas and just in general, knowing that they're making it so there is going to be a Lucid factory in between the three biggest cities in Saudi Arabia, 100 miles from each. Just that distribution network and the quality and
the Saudis own 60% of the float too.
Yeah, 64% by the Public Investment Fund of Saudi Arabia. So just knowing that they obviously have a vested interest and they have as much money as they want. So that's why I think Lucid's a rare exception. And that's why I was also bullish Lucid. But you're totally right about like the whole thing here. Like if someone comes out with better tech, I think that without having a strategic connection like that, then other companies will just continue to lose their moat. Like there's so many car companies that we're trying to get off the ground, but like the space is starting to close in. Like people are not as early anymore. If you're trying to put a car out in 2025, Tesla will be making like 3 or 4 or 5 million cars by then. So good luck.
Yeah, it's about at this juncture, in emerging industry, it's about a couple things. It's about, can you scale, number one, which that's to be seen for companies like Lucid and Rivian, but they have the money and the factories to do it. The other question is, what's the difference between your gross margin per vehicle versus other manufacturers? And can you be a more profitable business as a result? And the third thing is the technologization of vehicles, if that's even a word. I don't know, it's not a word, but the fact that vehicles have become technology hubs now, right? If you go back to like the advent of the internal combustion engine vehicle, it was just the engine and a frame. And now we're getting to the point where electric vehicles are becoming a lot more than just a battery and a frame. I mean, they're whether you're looking at AI autonomy or whether you're looking at other high-tech integration of these vehicles, driving a technology advantage is the way you defend your moat in this industry or in any emerging industry. Emerging industries are so much more focused on the technological advantages than they are about, how many vehicles have you sold or how many cars do you have on the road? When I hear people knocking Lucid and Rivian, that's the first thing they say is, oh my God, they only have so many cars on the road. Well, Tesla only had so many cars on the road when it first started too, right? So it's like, it's a matter of whether you believe they can execute or not. And from my viewpoint, if they have a technological advantage that they continue to innovate in, continue to drive that wedge further, then that's a legitimate case for how they can defend market share in the future. But again, emerging industries are just about, why should you get market share? And whether that's a technology advantage, a brand advantage, a price advantage, whatever it is, why should you have market share? And then B, can you defend it? So if you're capturing market share because you're a cost, can you defend that lowest cost in industry, or is somebody else going to undercut you with a cheaper product? If it's because of technology, can you defend that technological advantage and continue to innovate, or is somebody going to overcut you on a better battery? And when it comes to other things like brand, is your brand powerful enough to leverage internationally, or do you need more global recognition? Do you need more recognition in regional markets and local markets? Like, brand, technology, and your ability to defend this market share is really what's going to drive any competitors. And so it's really a speculative game, but make no mistake, 90 to 95% of these companies won't exist in a matter of years. They'll simply outspend themselves, won't be able to drive high enough margins, and won't be able to protect their own market share. If you go back to the history of internal combustion engine vehicles, this exact same thing happened. We had a lot more car companies at one juncture, and then what happened? 5 or 6 survived, right? And so knowing that, and knowing that, like, the ones that do survive, even if you say, let's say 20 or 30 of these car companies survive, the ones that do make it and do have discernible advantages are likely going to be acquired via consolidation in the industry. And so that's another thing that people need to keep in mind, is that even if consolidation doesn't happen early, and we let 80 to 90 to 95% of these companies fail, the ones that survive will still be on the table for acquisitions. And if you're an investor that's made it through the trenches of the years that it takes to get there, and you own one of those companies, it could be beneficial to you. But if you own one of the losers, it also could not. It's one of the main reasons I've always knocked Fisker, which I know is a really popular stock on Twitter, but I've always knocked them because they don't have any competitive advantages. They don't make their own cars. They don't make their own batteries. They don't have any battery tech. They're buying cars from Magna. Their margins are going to be lower than almost any other vertically integrated competitor in the industry, which is another thing, by the way, is that I lean on, is vertical integration. It's so important in any emerging industry to be able to control your product, control your R&D, control your cost, control your supply chain. These are massive advantages in an emerging and developing industry like this. And make no mistakes, EVs are an emerging industry. They're only 3% global market share. To call them anything else other than emerging industry is just incorrect. And so, knowing that it's still new, it's still innovating, and we're still headed towards solid state batteries and all these other alternative battery innovations that we don't know what direction they're going to go in, how quickly they'll come to market. There's so many intangibles here that you really have to rely on the things that are available, which largely in this space is the technology. And I don't think enough people are focused on it. They're too focused on, Fisker can sell more vehicles because it's cheaper. Well, that's not going to drive their advantage.
Quick question on that. I was a big fan of like BlackBerry back in the day, like a year ago, and I think I'm probably a year or two too soon on that. But talking about the technology and these vehicles now becoming more than just four wheels and a base, right? Like, what other companies do you think could possibly benefit as cars become more technical, like more technology becomes into those vehicles?
Semiconductors, definitely, and then lithium miners as well. Those are the two, that I really like to lean on as pick and shovels. We need more chips, but we also need a hell of a lot more rare metals. And as abundant as lithium is, I kind of spoke on this yesterday. As abundant as lithium is, you still need more lithium infrastructure for production. You still need these mining companies to scale, exponentially. Demand is going to draw these lithium mining companies not only higher in stock price, in my opinion, but a lot bigger in size. A lot of these $3 to $4 to $5 billion lithium mining companies are going to become 10, 15, $20 billion companies, in my opinion, in the next few years, because this is one of the biggest skewed demands we've seen for any kind of commodity ever. I mean, lithium demand is going up 3, 4, 500% year over year, and we still don't have enough to accommodate the movement. Analysts are expecting that we're going to need a 20 to 30x lithium production over the course of the next 8 years to accommodate this. Who's the beneficiaries of that? I think they're lithium miners. And when you look on the battery side, that's important too. There aren't a whole ton of battery companies that are publicly tradable on the U.S. stock exchange because most of them are Asian companies. But knowing that batteries, miners, and semiconductors are three industries I think will really, really rip off the growth of electric vehicles, and it's just a matter of time. Electric vehicles will be the number one vehicle class in the world. It's just a matter of time.
Agreed. We just went straight EV, Akib. Hopefully that answered your question.
No, it does. I appreciate the really in depth, so I appreciate it. Thank you so much.
You're welcome, man. I think we'll do one more. Want to stick to 2 hours here, so I think we're closing in on that. We've been going for quite some time. So yeah, why don't we take one more question? Jake of Vilas.
Yeah, hey guys, sorry, I had some issues getting up here. I think my Twitter was having issues connecting. I guess this would be for anybody on the panel, mostly for the people who find themselves entering positions as day traders or swing traders more. What kind of cash balance is comfortable for you at the end of each day or end of each week? I know end of this week is a quad witching event, and with the Federal Reserve meeting, I know volatility is going to be a big issue for a lot of people. So I guess maybe two parts on a week like this where there's known events, binary events like a Fed meeting and quad witching, and also just on a regular week when there's not tons of option expirations and catalysts. What do you guys see as a comfortable cash position for yourself? Thank you.
Okay, yeah. I didn't know if anyone else wanted to say anything, but I think I answered this last basis because I do think, and I'm very happy to answer it again because I think it's super critical to being successful in this market, like in the long run. I'd say, like, I heard this quote once, and it's resonated with me ever since I heard it, where it's like, don't look at your upside, cover your downside. It was said much better than I just said it, but like that's the paraphrase version of it. Where like we're always expecting the what ifs, right? And it's good, it's fun, it's enjoyable to think like what if. Also know like what if not can happen just as easily, and especially in a tough market like this more often than the what ifs. And so like to your question about how much cash is a percent, I don't look at it as cash as a percent, okay, because it really isn't. When you look at your downside, you're not looking at like how much cash you have. That's not the answer to the question that you're asking. The question that you're asking is, how much money do I not want to lose? That is your actual question, right? So, and I'm not saying that there's never, this is like a very different thing I'm saying. I'm not saying that there's never a time to have cash. That's not at all. I think that like that's fine. But I'm saying like this will help you more in terms of long-term investing, is I think, how much am I comfortable to lose, and assume all of it's not in cash. Because here's the thing, like if you're investing, you'll probably at some point likely convince yourself that there's a good buying opportunity, and then you're gonna be like, wow, holy crap, SC is at 210, let me buy that. But like what if SC goes to 150, right? So just assume that like everything is fully invested, even if it's not. And if it's not, right, like then you know that your worst case scenario is actually better than it would be if you start adding a certain percent of cash. So I think that's the way to think about it, because I find too many people, and like I've noticed myself doing this at some points this year, but really like thinking about this quote and like holding it in and just kind of hammering it home to myself is just, I have this cool thing on like one of my platforms that just has like a risk slide. So if everything were to go down like X percent, I know what I'm willing to lose at that level.
and then like you can add a market beta or whatever, because like stocks will have a beta to the market, so you can more accurately. And I'm not saying it's 100% because there's obviously like Roku can go down like 15% like it did today, but I'm saying it'll give you a better sense of that answer to the question that you're asking. But like if you just want like a blanket answer, like 10 to 20% is usually what people say they do, but like I don't think 10 or 20% is what people do on average at all.
KT, go ahead. I think you have something to add there.
Yeah. So for me, that question kind of varies between having a trading account, a short-term mentality versus a investing account, and a long-term mentality. So when it comes to a trading account, with respect to how I kind of do it, like it's an account where I usually never add money into, and usually an account that takes money out into a investment bank account. So when it comes to like these risky kind of scenarios, like I typically go risk lower, where like I'm usually risk off, sitting mostly on cash, and if my short term trading account is around $100,000 and my usual bet is around 50,000 to 80,000, what I kind of did this week was 5,000 or 8,000 is what I was going after. That was my typical bet. Go ahead, Jake. Like you had a follow up on that.
Yeah, I think I thought I meant to say this earlier. I might not have clarified. I was thinking more for short term, either day trade scalps or maybe at the max like a 7 day swing, like a very shorter term trades. I like to have a little bit of cash in my long term account. I tend to follow more financial advisory rules, like you said, 10 to 20%, depending on the season of the market. But I was thinking more just for, I know TSDR was probably about to jump up and say all cash by the end of every day. But people, yeah, like questions like that, like end of every day or end of every week, just because for the time frame, that's more of what I'm looking at, like intraday scalp, or if I hold something overnight, I would rather not hold it over the weekend too. So I do appreciate the answers. I just wanted to give a little clarity in case that would help target the information a little better.
Oh, definitely, definitely. That really helps, because how I kind of do that is like I get some kind of a profit out, and when there's risk on, a risk off kind of environment like we have today, right? Like before FOMC, you don't know where things will go. So I kind of lower my bets. That's one thing that I kind of do, and keep mostly cash. And the second part is like I tend to go like when the VIX shoots up and falls off like how it did today. I kind of tend to go longer dated, right? Like I don't try to go after weeklies per se. And most of the scalping and the day trading kind of techniques, you have to be very patient, right? Like most of the time you have to be like risk off and wait for that perfect setup. Like I understand that it's it's hard to do that, but like you want to stay more cash in such kind of environment.
Awesome. Thank you, guys.
Rahul, can I add something just quick to that? Because
Go ahead.
KT just like hits the parts of my trader that like are so right with me. I love his thoughts. But yeah, I mean, I'm doing long term calls pretty much only as well, and it kind of just as he was saying, that made me realize that like trading options. So like trading stocks, you can take the same analogy I'm about to give, just in terms of like market cap and like how much they move every day. But like it's very much so like a chessboard, right? Because like KT was saying right now, like the VIX was very volatile today and stuff, and it's better off to like look at some longer term plays. Like I was buying like SE for May, and I was buying some different other calls like for May out there. And so when you're looking at and like where you're allocating your capital, especially in these like tumultuous times, you can have some pawns, which are your weeklies, right? Like if things reverse like today, like we made like great money on, like I was in IWM 212s and like they went from 1 to 7, right? But then the most important thing is to secure the back. So that went 1 to 7, right? Like not, and I didn't even realize, it just started running and I just ended up forgetting I had it and I sold it at the end of the day. But 1 to 7, then you think, okay, where can I put 7? Because like 7 to 14 is not just 7 risk up, it's 7 risk down. So like, right, like your pawns, you can take them off, right? Because you're already like starting to be in the battle. So you take off your weeklies and you start adjusting. And you're like, okay, I'm looking for longer term for either continuation or waiting for a pullback to buy into something long term. That like for example, like I was buying like SE 230s for March and like May or whatever expiry that is, just because like I'm risking like 15 and 1500 per option or whatever. But I can also do a myriad of things. Like I can say, well, things ran a lot today, and premium started spiking on these calls into the end of the day because we were up so much. So let me just short some 300s in the meantime, because you're never going to be upset that I shorted some
premium $70 out, because right, I can go from 15 to like 60 comfortably if it gets in the money, and by that time I can start rolling up the lower leg. So you can take the 230, it rips to 250, you can take the 230 to a 260 or a 250, right? And then you take your profit out from there, and then you go into those long-term liquidity plays like I was talking about. So that's why I was saying, like, what you have to be comfortable with is how much you can lose, because it's like there's a million ways to skin this cat that is the market. And I think that there's some systems that just work better because they're intuitive. If you know that the market has these cycles, on the up cycle, you secure profits and then you prepare for the down. So like KT was saying, this crazy up today, while, it could continue, and it very likely will. And because like all these growth names are still ripping after hours and probably going to be up a ton. And that usually doesn't happen often unless there's like a strong continuation and more unwinding to be done. But I'm saying, like, in general, you always want to just consider, how much money you'd have if everything dropped. Like, I always check 5 or 10%. Like, if everything dropped today 5 or 10%, how much would I lose? And then if it's too much that I don't like it, I'll add more puts, or I'll trim off some of my calls, or I'll go from shorter term to longer term. Because if you have like I literally did this today, I had net calls from like sub 130, and I had 135s, and then I was like, okay, cool, these are like $3 in the money now. These are like 4 or 5x, but it's Wednesday, freaking 4 p.m. So let me just roll those out to like 140s, 160s for next week, and I'll take some off the table, and I'll get like a 2 net profit. So thinking about like securing the bag while also adjusting to safer things over time is the way to think about it. But I always like to look at, like, if something were to go down X%, like that net position, whether I have calls and puts against it or whatever, where would that be? And then look at that as a whole.
Awesome. Well, pretty in-depth answer. I do want to be cognizant of time and honor everyone's kind of schedule, just because I set 2 hours and these guys stayed on the whole time and were very helpful. And I think this was a great space, and really happy to hear it from the panelists. So, again, thank you guys for joining, and thanks a lot for tuning in. I know there's a lot of questions still. I'm sorry we can't get to everyone. We run these pretty often. So like I said, just follow the panel. I mean, Stock Talk has a Q&A all the time. Evan's on a lot of spaces, Pounding the Table team. We run many as well. So Tony, Avi, myself, PTT handle. Definitely a shout out to Luca, TSDR, KT. You guys have been on with us a lot recently. Great accounts as well. Definitely follow. And our next spaces will be next Tuesday. As I mentioned, that's the scheduled one. We might be on before. Not sure. So those are spontaneous. But that flyer, I pinned it as well as shared on my feed about an hour ago. That'll be around Tesla with Sawyer Merritt. Once again, thanks a lot to the panelists. Thanks, Evan. Thanks, Stock Talk. Thanks, Tony, for joining on. I don't know if you have any closing thoughts before I just go ahead and end the space. I just want to ask one last time.
Yeah, man. I appreciate you, Raul, for having me on. I appreciate you. Follow Pounding the Table for all you who don't. Thanks, Anthony, as well. I appreciate it. Love coming in with you guys and having a conversation. Follow all these speakers up here. Follow Evan, Stock Market News. Follow Raul. Follow Markets and Mayhem, who will also actually be in my Discord as well as a contributor. So that's cool. Follow Avin. Follow everybody up here. Great accounts. Appreciate you guys doing this. I mean, I'm down to do this regularly if you guys want to make a thing. Would be happy to have you guys on my spaces as well. So just appreciate you guys, and hope you guys have a good rest of the week in the market, and hopefully a better week next week, because I hope it will be, and I think it will be. A market setting up for that.
Awesome. No, thank you, Stock
Thanks,
Talk.
everybody.
Love
Yeah, this was a
interacting
lot
with
of
you.
fun.
And
I appreciate everybody on here. A bunch of great thoughts. We'll definitely just keep on doing this. Like, I think, it's really nice that the people are like starting to, just all talk together and kind of figure it out, because, times got tough and in the market for most people on FinTwit. And I think it's really cool that, like, we're all just happier to chat together and everyone's learning. And it's like all this like silly petty beef that was kind of happening for a lot of FinTwit for most of this year is kind of just, died down. And I think we're just kind of communicating as people, which is sick. And that's why I love coming on here. So we'll definitely be back soon.
awesome. Thank you, guys. And once again, big shout out to all the guys that came on today. Really appreciated it. Thanks, KT, Avi, Pounding the Table. Thanks, everyone. And thanks for taking time out to listen. We'll post the recording hopefully soon, probably in a week or so. And the recording is done live here too, so you can actually click back on this tweet once it's ended and play right off the tweet. So it's on Twitter as well. So thanks, everyone.
Y'all on level 1, I'm level 3. Pounding on the table for my team. Every night I flex, I'm making big moves. That's a big move. Big money,